Welcome everyone to day one of the FinEquity Annual Convening 2026, keeping gender on the agenda when funding is tight. My name is Mariana Martinez and I lead FinEquity, a community of practice to empower women through financial inclusion, convened by CGAP and hosted by FinDev Gateway. I'm very happy to be your host today. We have a full agenda ahead with a packed program of activities and close to 800 colleagues registered to participate, which is fantastic. Let's get us started then. We invite you to introduce yourself in the chat. Many of you are already doing that. Feel free to share your LinkedIn profile and a short introduction. It's a great networking opportunity that we have here today. And it's also so wonderful to see so many familiar faces join us today and also to welcome many new ones. I'm joined today by an amazing team. Dani Oliveira, who is working behind the scenes to make all the technology run smoothly so we can all actively participate today. Also Gaia Manukian, who will be sharing highlights live on social media. Avi Augusta, who will be supporting you in the chat. And Sebastian Wasserzug, our interpreter today, helping us to communicate in both English and in Spanish. Let's start with a few quick logistics. First, the session is being recorded, and we will share the recording with all attendees and registered participants at the end of the event or in a couple of days when we put everything together. Your microphones will be mute during the plenary sessions, but you will have an opportunity to turn on your camera and mics to participate during the workshops. We encourage you to use the chat. Please send your questions to everyone so we can all see them and engage together. You can see here some logistics for the interpretations. If you would like to listen the event in Spanish, please follow this step that you see on the screen. First, click on More at the bottom right of your screen, then select Interpretation and choose Spanish. Si desean escuchar el evento en español, por favor sigan estos pasos. Primero hagan clic en More o Más en la esquina inferior derecha de su pantalla. Luego seleccionen Interpretation o Interpretación y finalmente elijan Español. Now we have here the agenda. You can see the QR code to see the full details of the agenda. As you see, today's event brings together plenary discussion, interactive workshops, and opportunity to connect with each other. We are coming together as a FinEquity community around a shared challenge today: how to sustain progress on women's financial inclusion in a context of tighter resources and rapid changes. Through the day, we will explore practical ways forward across discussion, networking moments, and 6 parallel workshops. Each workshop will dive into an area, including product design, gender data, financial health, social norms, and AI. But before we do that, we have very good news, quick news that we would like to share with our community. Our FinEquity community has grown fast to reach 8,600 unique participants across our 3 chapters: Global, Latin America, and the Caribbean, and Africa. A recent independent evaluation of FinEquity shows that the spaces like our communities are not just valuable, they are essential for our work in the sector. In fact, FinEquity is one of the few platforms that bring together such a diverse set of actors across the ecosystem, from practitioners and founders to researchers and policymakers. But not only that, FinEquity helps keep gender priorities visible, connect practitioners across regions, and create a trusted space to share work, learn from each other, and move faster together. And we're seeing real impact, and this is coming from our independent evaluation. 40% of participants report a direct influence on their work. That includes from shaping strategies to find partners, while 2/3 highlight learning and knowledge exchange as the main value of being part of this community. And this becomes even more important in this context that we operate today. Across the sector, where resources are tightening, while the challenges are still that we have ahead are still more urgent than ever. In this environment, collaboration is not just helpful; it's really essential, and that is exactly what brings us together today. And now, we really would like to invite you to learn about your experience. We invite you to go to slido.com or scan the QR code that you see in the screen and use the code FinEquity 2026 to answer some questions that we have for you today. So Danny, when you are ready and would like to share the slides surveyed in the screen, so we can know who is in the room today.
Here we go.
Perfect. Let's see. I cannot see the slide yet, but it's coming up in a second. But this allows us to go to slido.com and use the QR code. And Danny, please let me know if you see the. Oh, here it is. Perfect. First question, we would like to know where are you joining us from today? Let's see who is in the room today. So I can see Colombia, Washington, D.C., London, Mexico, Egypt, Nairobi, Nicaragua, Germany, Paris, Delhi, Tanzania. This is fantastic. It's great to see such a global community, right? This diversity is exactly what makes our community very powerful. We can go now, Danny, to the next question. We would like to know what best describes your role at your institution. And we can see advisor, consultants, sector support organizations, FSPs join us today. Let's give it a couple of minutes to see. Perfect. So we have a very mixed crowd here today, which is great. Fantastic. Let's go then to our next question. So we can talk about the challenge that we are facing today. We would like to know what is the biggest constraint you are facing in your work right now. And this is, we think, is a very timing question. Oh, as I can see, funding, capital flows, gender backlash, political change, inadequate funding, lack of data, access to finance. It's not a surprise, right? Funding is it's very big in the screen right now. This is exactly what spaces like this matter. So we can surface challenges and learn from each other. And we can see that funding, like lack of data, access to finance are the most answers here. Danny, please, let's go to the next question. We would like to know what makes a big difference to your work right now. What would make the big difference to you right now? And we can see right now funding, more innovative funders, certainly cheap funding, more collaboration, programmatic funding, available funding, ecosystem collaboration. Perfect. These help us to not only understand the challenge, but also where the opportunities they might be. So thank you, Danny. Let's go to the next question then. And this is an important for us. We would like to know how FinEquity can support you. What could FinEquity do the best to support you? You will need to rank this in order from one from being the most important up to 5, I think. And let's see. Yes. So you can choose between create opportunities for collaboration and partnerships, share research and practical knowledge, amplify my work and help keep gender on the agenda, connect with peers, and create a space to self-share problems. Let's give it a little more time so you can answer that. And this is fantastic. So create opportunities for collaboration and partnerships and share research and practical knowledge is what you value the most. And this is very important for us because these answers will directly shape how we support you. whether it's connecting you with peers, sharing practical knowledge, or creating more opportunities for collaboration. Perfect. So let's go back to the presentation. Give me just a second so I can share my screen with all of you. Or for some reason it's not working for me. Right now I think you can all see my screen. And with that in mind, let's go to our first session then. Collaborations in Times of Constraint, how founders are rethinking their role. And this will be a great discussion, we think, with my colleague Valdete Berisha, Senior External Officer from CGAP. So I'm going over to you, Valdete.
Thanks, Mariana. That's great to see all that activity from the FinEquity community of practice. Now, I'd like to turn to the conversation we're about to have, which addresses a question that I think it's in everyone's mind these days. How do we make sure the work on women's economic empowerment continues in an environment where development aid is declining, resources are scarce, and we're all trying to do more with less? So for context, I just wanted to mention a couple of things. One is recent data from OECD shows that official development assistance has declined by 23% in real terms in 2025. And that's government aid that goes to lower income countries. And that's adjusted after it's adjusted for inflation. So that's the largest annual drop on record. And this decline, according to OECD, is expected to continue. In addition, after more than a decade of growth, OECD also notes that aid with gender equality objectives fell by 13% from 2023 to 2024. However, there's some positive news. Recent funder survey conducted by CGAP also shows that new commercial funders are stepping into the financial inclusion sector. But there is a problem. Most of this new funding is not tied to explicit impact mandates. So I just wanted to give you this context because this is what we will be exploring. What does this all mean? And that's what the 5 speakers on this panel are here to help us think through. So let's get into it. We have 1 hour conversation with the 5 speakers whose job is to think about these kinds of questions and also to decide and shape where the funding for women goes. I also want to acknowledge the obvious. We have a panel of only women, and that is not by design. It just seems like women are still the ones holding the front on gender work. So just wanted to mention that. So that said, the speakers are well-known names in our community, so I won't spend time doing full introduction, but I will mention them quickly, and I'll leave it to them in terms of how much they want to share about their work. But I'm sure you can find information about all of their institutions and the speakers themselves. So the goal here is to focus on the conversation. So I also want to thank them because some of them are here connecting really early and some of them are connecting really late during their day. So thanks for joining us and for being here today. So we have Greta Boll, who's Director for Women's Economic Empowerment at the Gates Foundation. Hi Greta. Janet Kutelli, Founder and CEO from Fortune Credit Limited, which is a microfinance institution based in Kenya. I'm hoping I don't see Janet, but hi Janet, if you're there. Luz Gomez, who's the Vice President for Research and Insights at MasterCard Center for Inclusive Growth. I can see you, Luz, so hi, welcome back. Jemima Njuki, who's Director of Gender, Women and Civil Society at African Development Bank. Is Jemima here?
Yes, I am.
Yes.
Hi, Jemima. Thanks for joining. My screen is small, so I can see everyone. Francesca Randazzo is also joining us. She is Chief Technical Advisor and Head of Technical Assistance at LuxDev. So, Francesca, I'm hoping you're there as well.
Yes, I am.
Great. Well, thanks everyone and welcome. So I'm going to start with a question that's focused on capital. How capital reaches women and what's at risk in this changing funding landscape. And Greta, I would like to start with you because you've done a lot of work recently at the Gates Foundation on Capital, looking at the full spectrum from grants and concessional capital to commercial credit. And you've been trying to understand what that each can and cannot do for women. So drawing from your work, how should funders support women's economic empowerment in this new environment?
Okay, that's a big question. Good morning. I'm the person in the early time zone. My name is Greta Bull. I'm the Director of Women's Economic Empowerment at the Gates Foundation, but I also have a long association with CGAP, so it's really nice to be here. I think the simple answer to your question is mostly capital's not reaching women. So I think we have something we have to pay attention to and to continue to pay attention to. And so, we sort of think about financial inclusion, and there have been some important gains in financial inclusion, but honestly, many women still aren't in the formal financial system. We did some survey work in Uganda with CARE and learned that there are more women in VSLAs in Uganda than have bank accounts. So, we have to start thinking about meeting women where they are, which is not informal finance. And they're on farm and they're in nano and micro enterprises. And the most common source of capital they have is from a VSLA or a SACO. It's not from a bank, and it's not from a microfinance institution. And we have to remember that by most accounts, between 95 and 99% of enterprises in Africa are nano and micro enterprises, not small and medium-sized enterprises. And that becomes relevant when I share what I will share in a moment. And actually, even more than that are smallholder farmers in most of Africa. So how do we reach this segment with finance? Well, a lot of banks in Africa have credit lines from DFIs for MSME finance, but we took a closer look at this and we found that only about 5 to 10% of that money made its way to actual micro enterprises, despite them being the overwhelming majority of enterprises in Africa. The kinds of entities that are lending to micro enterprises are what we would call impact first lenders, or IFLs for short. So it is microfinance institutions, some fintechs, SACOs. And these entities are providing between 55 and 62% of all lending to micro enterprises across East Africa and Nigeria. And one thing that blew my mind on the survey work we did is fully half of micro lending in East Africa is being done by SACOs in Kenya alone. So clearly we need to invest more in supporting impact first lenders in Africa and bringing their costs down because the cost of credit is also really, really high. And so we need to build out financing and refinancing mechanisms for impact first lenders, ideally in local currency and at lower cost in ways that help them to provide a better service to their customers. We need those IFLs to get bigger, which is ultimately what will bring costs down for borrowers. If you look at BRAC, a huge part of their charitable work is actually funded by their commercial enterprises like BRAC Bank, BRAC Microfinance, and Bcash. The foundation's been working on a fund to do just this. It's called the African Women Entrepreneurs Fund. We hope we'll be able to use that fund to make more wholesale financing available for IFLs and to do it at lower cost over time. But in addition to this, we need to make policy choices that encourage financial institutions to lend to micro enterprises and not kind of wrap it up in MSME finance that basically reaches medium-sized enterprises. We need to make data more broadly available for IFLs, and we need to do a better job digitizing them so they can reach that segment. Because that segment is really hard to reach and to support and to be profitable doing, right? So we should be finding ways to make entities like BRAC, MCOPA, FINCA, One Acre Fund, and the like to get bigger and more digital and stop fooling ourselves that big banks are going to manage this. They're just not. And then another important category sits at the confluence of commercial microfinance and social protection, and that's VSLAs, Village Savings and Loan Associations. VSLAs are relatively well known in Africa, but they're not really organized at scale, and as a result, finance has typically not flowed into these ecosystems other than kind of ad hoc CSR type arrangements. India is showing how a well-organized system of women's savings groups can make capital available to women's groups at very affordable rates between 7 and 12% and at scale. But that requires cooperation between banks, governments, and NGOs. And you have to kind of build a system. But that partnership has mobilized 151 billion in financing to self-help groups, which is the VSLA equivalent in India. And those loans are being paid back at high rates. Defaults are consistently below 2%. And what that means is that rural women in India have sort of a gentle on-ramp to commercial borrowing that helps them to understand how to borrow and save and record transactions. We've digitized that platform in India before we put them into a commercial financing ecosystem. So this system, which is called the National Rural Livelihoods Mission, currently reaches 103 million rural women in India. And we've been able to document pretty consistent increases in income of between 25 and 30%. Is it a replacement for commercial microfinance? No, but it's a really good on-ramp that helps women better understand how to engage in the financial sector. You have to start thinking across silos. Like VSLAs were kind of off over here doing what CARE did, and then microfinance was here and banking was here. You need to think about putting those capital ecosystems together. So just wrapping up, what can donors do to support more capital to women's enterprises and smallholder farmers? Well, one is to support a flow of more affordable financing into these ecosystems and to help de-risk that financing in exchange for bringing the cost down. We've been able to find between 250 and 500 basis points in cost savings on a 20% cost of capital basis by connecting IFLs to domestic sources of capital. We can provide TA to impact first lenders, including those that run VSLAs, to help them digitize the credit histories of their borrowers. We can support impact first lenders with OPEX to help them cover the high cost of reaching these customers. Aceli does this very well in its work with ag MSVs in East Africa. And we can support policies that help direct funding for affordable credit access to this segment. And just maybe one final thought, because people like to make a fuss about subsidized lending. And I think it's worth, subsidized lending has to be done very carefully. I should say that up front. But it's worth dwelling on the fact that ag lending in the United States benefits from between $40 and $100 billion a year in subsidies, depending on the year. And these aren't smallholder farmers. Community development finance institutions benefit from U.S. Treasury guarantees to keep their wholesale borrowing costs low. They pay what the U.S. government pays for borrowing. And in the US, we subsidize mortgage lending so people can lock in 30-year mortgages at fixed rates. For some reason, we seem to believe that the poorest people in the world should borrow on purely commercial terms when we don't do it ourselves, either in the US or in Europe. So we need to put commercial and concessional capital together in ways we've not really done before and squeeze every single drop of cost savings we can out of that arrangement. And we need to do a much better job of crowding in domestic capital. The African Development Bank says 4 trillion is sitting in, domestic banks, in pension funds and insurance companies. We need to do a much better job of crowding in domestic capital, which should be cheaper because it doesn't require expensive hedging. And all of this can be done and should be done without unnecessarily distorting markets. Indy's shown that this is possible to do, and we should really take some lessons from there. So let me stop there.
Thanks, Greta. That provides a really good overview. I'm going to go to Jemima now, because Jemima comes from the Africa Development Bank. And Jemima, you've worked a lot, and your work emphasizes on that the women's economic empowerment depends on broader systems, including care economies, livelihoods, infrastructure, and food systems. So I want to ask you, what role can DFI capital, including Africa Development Bank, can actually play in empowering women economically? I just want to go back to what Greta said. Only 5 to 10% of the money that DFIs provide goes to micro enterprises. What can DFIs do to increase that, and what are some of the constraints you face?
Thank you very much, and thanks for having me. Great to see everyone. I think let me just start by reiterating something Greta has said, because of course we are starting to see the shrinking of the aid envelope. I think this is clear to everyone. but the structural conditions that have been holding women back have not shrunk with that. And I think what concerns me most in this new environment is not the loss of funding per se, but the consequences of it. And the biggest consequence we are seeing is this risk of narrowing of what counts as women's economic empowerment. When the conversation shifts and almost entirely towards what is commercially scalable, what is measurable, we tend to end up financing the easier parts of the puzzle, the digital wallets, the short-term credit. And these are important, but what then ends up happening is we start quietly walking away from the deeper, harder work. And that's the care economies, the food systems, the agricultural value chains, the livelihoods infrastructure. Because when we talk about women entrepreneurs, that's where they are. They aren't existing in a different space. And these are not often soft issues because they're not at the margins. They are the foundation of women's economic participation, and they really must remain at the heart of what development finance institutions like the bank does. And if you just look at agriculture and in Africa and the many women that are working in the agricultural sector, they're growing the food, they're managing the supply chains at community level, and we see over and over again, they remain systematically excluded from the capital, from the inputs, from the market linkages that would really allow them to move from that subsistence, that micro, to actually grow their businesses. And we see more and more that financing women, for example, in agriculture value chains is not just a gender program. It's a food security program. It's a climate resilience strategy. It's a macroeconomic strategy. And so for me, that's why it's really important that we make these connections. And so DFIs like the African Development Bank, we have an irreplaceable role to play because we're not subject many cases, to the same quarterly pressures as commercial banks have, as fintechs have. We can absorb risk. We can build the proof points. We can crowd in private sector and the right private sector. But we have to keep our eye and we must hold the line on what belongs at the core of that mandate and what belongs at the core of women's empowerment. And so for us, the issue is not whether these issues are important, they are, and the question is whether institutions like ours will continue and can continue to finance the ag sector, they can continue to finance climate resilience, and can continue to finance the women that are in these sectors, even when the political winds shift. And really my answer is we must, and at the African Development Bank, we intend to. As Greta mentioned, we are looking more and more towards the continent's domestic resources. We have a new president as the bank who's been very, very clear that Africa is holding $4 trillion. We need just about 400 billion of that a year. So the resources exist. The challenge is how do we mobilize those resources to work for the people in the continent? And my question is, how do we mobilize those resources to work for the women in the continent? So he's come up with this new African financial architecture for development that's bringing together everybody, the money that's sitting in pension funds, the money that the diaspora is sending home that is not sending in a structured, investable way. It's the money that's sitting in insurance. It's the money that's sitting in national country budgets that's not always budgeted with gender equality at the forefront. So it is we trying to mobilize all the different actors so that we're not just talking about the commercially scalable, viable, fundable investments that women, smallholders or women owners of businesses have, but the system in which they are operating so that system actually can also work for them.
Thank you, Jemima. It's great to hear that that kind of approach is starting to shift with DFIs and within the Africa Development Bank. So a lot of these topics that you mentioned, I think there's a few other speakers that are there probably will surface. But I wanted to just go, in the interest of time, to Luz, because Luz comes from the MasterCard Center for Inclusive Growth, and she sits within a philanthropic organization. So I wanted to ask you, Luz, what do you think the philanthropic institutions and the broader set of funders entering the financial inclusion space can uniquely bring to women's economic empowerment in this next phase? And where do you see opportunities?
Yeah, thanks for inviting me to this conversation. I think, clearly philanthropy can't replace all that's been lost, but I think we can act as a catalyst in terms of shaping the capital flows. I think that's, Jemima and Greta pointed to this, and building markets that commercial capital can actually enter. I think there is an opportunity to structure deals differently, not just put more money into the system. And we've been trying to, again, catalyze kind of this private sector network that MasterCard sits at the center of across the world. And again, just to build off of both Greta and Jemima, how do you start thinking about working across silos to get that done? Just to bring a little bit of a highlight to some of the work that we've been doing in partnership with the Asian Development Bank. We've been working to catalyze $1 billion in micro and small business lending across Asia Pacific, but we're trying to pair that with relatively small catalytic capital from the center, so from philanthropy. But we've really been trying to design these deals so that we learn from them and then also engage a broader network of financial service providers. So, for example, in the Philippines, as part of this facility, we've been bringing $30 million facility with Fuse Financing, which is part of a fintech GCash. But we specifically are targeting at least 50% women-owned businesses as part of this, and 50% in high poverty areas. So we have a performance kind of based grant alongside this facility that incentivizes lending into segments that typically wouldn't be potentially considered too small or too risky. So that's kind of one model that we've recently launched. Another in Turkey is part of this facility, $100 million facility with Akbank, but we're pairing it with what we're calling a transformation academy. So helping, this is more of a segment of smaller firms, helping them access new markets with export readiness, helping them with digital adoption, helping them with mentorship, which for women has been in high demand, as we've seen in other places. And, we obviously know that capital alone isn't going to be sufficient to really push women to grow. So, but in both of those cases, we hope to not just mobilize the capital, but actually help to change and shape who the capital reaches and ultimately what it enables. But I think Greta made an excellent point just in terms of there's a wide variety, there's a spectrum of entrepreneurs, and we need to recognize that different segments of women-owned businesses require different financial service models. We, for example, have been working with CARE through a program that we've been running over the past several years called Strive Women, really helping to grow women-led small businesses across 3 countries, but developing playbooks and that we could take to other and share with other providers. I know they're going to be on today's agenda as well. But we've seen, again, this continuum, and I think we need to be very cognizant of that. On the informal, the micro and informal end, they've been working with MFIs and fintechs to provide smaller ticket loans, but paired with things like support for business basics, digital adoption basics, market access opportunities. And then there's, the upper end of the small business segment, working with, for example, banks in Vietnam called the VP Bank, which will provide larger loans to that smaller small business segment, but with products that are designed for women. So, taking into account barriers at the ecosystem level, collateral requirements, underwriting for thin files, alternative credit scoring, et cetera. So, I think it just reinforces that there's no one single institution or product that's going to solve for growth and stability of women-owned small businesses. So you need a portfolio of financial service providers that serve different segments, that are bringing to the table different types of capital. So, I guess, in terms of, I think we have to be really intentional in this next phase. It's not business as usual. And then, philanthropy needs to play a role where it remains essential. So segmenting the market, helping to work with partners that can design products that work for those segments, sharing that with a broader ecosystem, and then hopefully fund those ecosystem gaps like capabilities or risk mitigation, et cetera. That's going to actually translate into bigger impact. So I'll leave it there.
Thank you, Luz. I would like to go to Janet, because Janet represents a microfinance institution that is serving women in Kenya. And she's spent the last decade or so trying to build this microfinance institution that she founded and make it into a sustainable organization. And I want to just ask Janet, from her perspective, I guess everybody on this panel agrees that commercial capital alone is not going to reach the women that are hardest to reach. But if you can share a little bit about what your experience has been in terms of raising capital for the work that you do, and what does that look like? And is it realistic to expect for institutions like you to serve women on purely commercial terms?
Thank you, and I'm glad to actually join this panel of great women with great ideas. Fortune Credit is actually operating from Nairobi, Kenya, but we have branches spread across different counties. Back to your question on raising funding for the client base that we're actually talking about. First and foremost, I want to say that serving women is actually at the core of Fortune Credit. First and foremost is because of the reason why it was actually set up in the first place, that we want to serve those people who cannot ordinarily get money from the traditional commercial banks. And when you're looking at women today, one of the barriers to entry, and I know that has been the reason forever and ever, is that you're not able to score them. Because if you use the standard scoring methodology that we have for people who are employed or in the workplace or big corporations, that cannot be able to work with them. Or maybe you're just looking to how can they be able to access capital. And when you come to Kenya, most people will be able to talk about more than 85% of the population is actually financially included. So does it actually mean that having an account today with M-Pesa or a bank means financial inclusion? I don't think that is the answer. Now, going back to fundraising, has it been easy for us as Fortune Credit for the past 12 years we've been in operation to raise capital? The answer is no. What has been the barrier is that the same way you'll be able to look at a smallholder farmer in a village being risky, that is how Fortune Credit appeared to many banks several years ago, because of the same reason that you don't have collateral and you also don't have a record that can be able to back your borrowing from the bank. And yet the role that the client base that we are serving today, being the smallholder farmers or the small traders or the border riders, they play a the game. Show me your audited books of accounts, show me the title of land that you have today. And getting $1 million for us as Fortune Credit was actually a tall order. There's nobody who will be able to give you that, because it means that you actually needed collateral that is actually not less than 150%, and we are talking about land. So when you talk about financial, someone cannot be able to get a facility from the bank, it does not just talk about the small enterprise or the entrepreneur that you're talking about. Even institutions like Fortune Credit cannot ordinarily get money from funding. How have you been able to grow our client base, especially for the smallholder farmers in rural areas, and 62% of our client base are women, is getting money from impact funders? I know that Greta had actually alluded to that earlier. So what is it that is actually different from the impact funder, for example, from Europe, who could be able to come and look at what you're doing in Kenya and say, I'm actually willing to give you $1 million or €1 million for you to be able to finance the client base that you're talking about today, is that they're actually thinking beyond the commercial terms. So as you look at the change in the landscape, where you are moving from donor funding to blended finance, where you're looking at the first loss guarantee, you're looking at the DFIs giving us credit lines, and maybe having subordinated debt from some of the institutions, is that the add-ons, let me call them add-ons for now. What we are actually calling add-ons, like technical assistance, is not an add-on per se. It's actually a necessity, that you cannot just purely lend to the communities that we are lending to today purely on commercial terms. And I want to give an example so that it becomes easier. When you talk about a smallholder farmer in a village, and one of our, I know Greta talked about the VSLS that we have, not only in Kenya, but across Africa, and now I've heard about the India conversation, is that you already have informal models working. Now, for us to be able to make sure that the informal models that are already working in our communities are there, is that you want to plug in the product. But on the product design, who sits on the table for doing the product design, is that we actually need to work with the customers that we are serving today. But when you look at agriculture, that is not only talking about the women in that particular space, we are actually talking about food security for the entire, for the globe. And then you're looking at the same client base that is affected by the climate risk conversations, so that the money that you're talking about, if you only put the profitability at the heart of the discussion, we actually miss out on the matter. So we've had financiers who've come on board and said, we are willing to give you XYZ amount of money for you to do on lending. However, how do you de-risk the clients that you're serving today against the climate risks? All of us, we know that at the Horn of Africa, we have always had droughts for decades. We know that we have floods and other climatic risks that are coming with us lending to that particular client base. So we've had institutions who have brought in money, and at the same time working together with us and saying, how can we do capacity building? For example, I know that we are among the few institutions that have an AI-powered scoring model, or just using alternative data for us to come up with a score, a credit scoring for a smallholder farmer. Could you be able to say that that would work with an entity that is only skewed towards commercial benefits? The answer is no. We've been able to see the climate risk conversation where everyone else, every funder, is actually interested in the climate impact data. But before you finance that, before you actually do the on-lending to that particular client, who is willing to be able to support some of the facilities like the first loss guarantee with some of the partners that we have, maybe on the green energy space or on the e-mobility space, has given us the ability to go ahead as Fortune Credit and lend to that particular portfolio because they understand the risks. But are you able to just also blindly say that you want to go into a particular sector without doing some research? No. So if you look at that commercial angle aspect only, does not guarantee impact. And at the same time, I also want to agree with all the panelists and say that for us to be able to envision the impact that we are looking forward to achieving, it cannot be done single-handedly. It means that we actually need to operate in a particular ecosystem, running all the way from the VSLS that we have on the ground, looking at financial institutions today like Fortune Credit, but who is this wholesale funder? The ones who are seated on this particular table and saying, how can we be able to have a conversation that will bring the real impact? And not just the conversation, is that we want to walk the talk and say that this can be done. So we have a lot that needs to be done around that particular sector. And yes, commercial lending terms cannot be able to see us envision or maybe realize real time the impact that we need to handhold one another and do the conversation one more time.
Thanks, Janet. I need to move along. I think you brought up a lot of really important points, and some of which actually relate to the work that Francesca does. A lot of it has to do with, first, let me acknowledge what you said is, that some of the issues or challenges that you face as a microfinance institution are similar to what your clients essentially face. So that's really a tough environment. But also you talked about the add-ons, which is the technical assistance, which is really things that are necessary. So I want to go to Francesca because she's head of the technical advisory, technical assistance at LuxDev. So Francesca, can you tell us a little bit about, if you could briefly, what your work entails and what you're seeing in Latin America in this environment where a major funder has kind of withdrawn and you're having to work with a lot of organizations where there's a lot of demand for the type of work you do.
Yes, thanks a lot. So good morning, everyone, and good afternoon. I'm also one of the early birds here. So Francesca Randazzo, I'm working for LuxDev, and we are the implementing agency of the Luxembourg Development Corporation, which means that we're not a donor or a funder, but actually we implement with different instruments the Luxembourg policy in terms of development cooperation, which is kind of a different, let's say, it follows like a different trends in the donor landscape because Luxembourg is not reducing its ODA budget, at least not for now. We're still around 1%. Also, we have a strong focus on gender, diversity, human rights. So we're kind of like, especially when we want to work on women empowerment, women financial inclusion, we are like in a kind of privileged position, let's say. So I'm currently managing a regional program based in Central America and Dominican Republic that wants to make the linkage between investment and technical assistance to support women-led SMEs in accessing better financial services. And with SMEs, we're talking about loans above $10,000. So it's not very big at the end of the day. Is it like a small window? So here in Latin America, what we are looking at is that it's not new. The donors are leaving the region. It's been like, I would say, a process of the past between 5 to 10 years. Of course, now what we are seeing is like the acceleration of those processes with venture donors withdrawing, and this leaves a huge gap in the sector. And actors like us, we're not bigger enough to fulfill the gap. And this is really affecting us in our work because as a small corporation, we need to work together with others. This is for sure. So where we try to always be additional. And in this landscape, we are becoming one of the most prominent corporation, especially when we talk on financial inclusion, women financial inclusion. Yes, we have to deal with the new problems that our partner organization has in terms of funding, resourcing, resources. And one of the main problems that we see right now, and it's not really at the financial sector level, but more at the ecosystem level that we work with, strong difficulties in maintaining the machine working because of the core funding of most organizations are really shrinking. However, what is interesting for us in this space in Latin America being like in the sector, the continent where microfinance developed so fast, and then commercial banks. And what I think is really interesting when we think that Latin microfinance or financial inclusion in Latin America is all these big banks, huge financial institutions. But when we go deeper and we see that you have actually kind of resurgence of VSLA, group lending, small cooperative working really like with most vulnerable women, because this commercialization trend also left a lot of women behind. And actually those organizations are the ones that are struggling the most because of course they're like less attractive from commercial investment. And they are also working with a population that need more support in terms of financial education, financial health, different type of products. And actually they are somehow having like the most expensive lending on the other hand. In our specific case, we were working more like on the SME segment in Central America because we found like a specific gap. And maybe what is interesting there is that now we are doing mapping exercises to see, who is investing in women in the region and and who is also financing financial inclusion for women in the region wants to. And actually, what we are finding is that there are a lot of local actors, namely can be investors, net worth individuals, foundation, local, regional. They are really stepping in the sector. They want to contribute, and this is for us is actually where we are trying to go also in terms of TA to support these local actors in developing TA programs to unlock this financing potential in the region. And I stop there.
Great. Thanks, Francesca. This is really great conversation. I wish we had more time. I think we're always ambitious with the topic and the speakers, but we can organize a follow-up discussion, I think. I want to move on to the next kind of bigger question, or not bigger, but big question around funding. And this time, I would really ask everybody to keep your answers as short as possible and to the point, just because we don't have a lot of time. So, the kind of funding that has gone into the sector has also funded what I call the connective tissue, the research, the standards, the convening that makes the sector kind of work together better. And often when we talk about resource constraints, we also say we cannot cut anything because everything is important. But realistically, we have to make choices. So I want to just put this question, maybe start with you, Greta, again, because you come from the Gates Foundation, which has been one of the key funders of a lot of this kind of work in the past couple of decades, along with other funders, obviously. But and as the Gates Foundation steps back, I'm wondering if you could say what kinds of what parts of the work that has been done in terms of the knowledge and convening it's worth fighting for, and what hasn't delivered enough to justify continued support. And this, then I'd like to open up to everybody for just brief kind of reflections.
Okay, thanks, Valdete. Well, a number of thoughts here. And I'll try to keep it short. The foundation's done really good work on the connective tissue, the research and the standards, but it's been on mobile money and digital financial services. And I think we have to recognize that this is a relatively narrow part of a functioning financial sector. So there's a lot more work that needs to be done. So let's remember that financial services involve savings, credit, insurance, in addition to payments, and that's mostly what the DFS work has been about. And just to comment on African financial sectors, they are remarkably shallow. And if we want to reach women with affordable capital, then we need financial markets to be much deeper. Banks are balance sheet maximizing machines. And so they are going to go where the return is easiest and best. And the last place they're going to go is women. And so we need that depth in the financial sector so that there is both a policy push to reach down market, but also a little bit of competitive pressure to push down market. So if you look at the most common measure of financial sector depth is domestic credit to the private sector as a percent of GDP. That number sits at 201% in the United States and 150% for the OECD countries, but right now it sits at 9.6% in Nigeria, 17% in Ethiopia, and 31% in Kenya. This financial sector in these countries is simply not being used to finance growth. It's being used to finance government deficits, and that really has to change. So just as we've pushed for people to have bank accounts, we now need to start pushing for people to have money in those bank accounts. And that, above all else, in countries where jobs are scarce, depends on access to productive credit. And that productive credit has to go out at affordable rates. Nobody can run a business on 40+% interest rates. And there is so much work that needs to be done here. The topics I flagged earlier are good starting points, but from a market enabling perspective, we need more research into where capital is going, not just at the financial inclusion at institution level, because that's where it usually stops, but at the end borrower level. We need to understand what's happening when people get access to that capital. We need functioning capital markets to get some of the domestic capital out of government bonds and into productive use. We need apex institutions that can channel finance into priority sectors without distorting markets, and we need guarantees and credit lines and a whole lot more market building to get people access to capital they need to grow businesses. You talk about what's worth fighting for and what we should leave behind. I want to maybe answer that in a slightly different way. I think this industry has wasted a lot of resource in the last 20 years because every single donor wants to invent their own small little bespoke things that they can take the credit for the impact on. So they end up duplicating efforts, not focusing on the things that will give us the most impact, reinventing the wheel when somebody else has already figured it out, right? The financial sector is a market system, and for donors to be effective, they need to know what each other are doing and they need to leverage each other. And because the World Cup is about to start, I want to use my favorite football metaphor. If you've ever watched a group of 5-year-olds play football, they all chase around the field after the ball like a swarm of bees. And what we have to do is move into a system where we have midfielders, goalkeepers, strikers, defenders, and we kick the ball to each other on the way to the goal. So we need government to work with the private sector, to work with philanthropy and NGOs, and we need to be working toward common goals and celebrating common wins. And unfortunately, since M-Pesa came out, everybody's been chasing around trying to find that next silver bullet that was going to make everything magically work, whether it's crypto, AI, or whatever the next big thing is. It doesn't really matter. Bottom line, there are no silver bullets. This is a complex problem to solve, and it's going to require long-term thinking, thoughtful partnerships, complex solutions, and a lot of patience. But if we can't get African finance aligned around financing African growth, then we're going to have a real problem on our hands. And as I said at the very beginning, for this to reach women who are at the lower end of the scale and borrow in smaller amounts, we need both more deep and more competitive financial markets. So the work needs to start up here and needs to push all the way down to where women sit in the ecosystem. That's it from me.
Thanks, Greta. I want to call on Jemima just to, where does Africa Development Bank fit in the soccer game in terms of the metaphor that Greta mentioned? What role do you think in terms of like the impact that it could have in this space it can play?
I think that at the moment in the continent, we are trying to be the referee, I guess, and trying to make sure that everybody keeps their positions and provide the capital and mobilize the capital that's needed to win the game. But I did want to say a couple of things. The first one is that, of course, we are seeing more commercial capital, being targeted at women, and it's something we need to be honest about. That commercial capital is essential for scale. It's essential for sustainability, but we cannot rely on it alone, because we know commercial money follows returns. And in this sector, returns can often be the low-hanging fruit. But we also have a role to make sure that capital is targeted, that it is actually working for the diverse group of women that we talked about, whether they're operating nano enterprises, micro enterprises, small and medium enterprises. So we and that information is flowing freely. But what we also need a lot of is being honest about where the gaps are. And I think you have summarized them very well, Valdette, in terms of the local capacity building, the technical assistance, the partnership building, the regional networks, the partnerships that we need to build to make this work. And sometimes it's not commercial capital that's going to fill fill that gap. It's DFIs, it's the philanthropies, it's what Janet was talking about, an organization like Fortune Credit that's right where the women are. And I wanted to give just two quick examples of how, as the bank, we are convening and working around this. We have a program called the Affirmative Finance Action for Women in 46 countries in the continent. Right now, we are at about $3.1 billion out, mainly to small and medium enterprises, and thinking about the next phase and how we design the next phase in a way that it works for women in all the diversity of their businesses. And we implement 3 components as part of this program. Of course, the most well-known component of it is the access to capital, because we have a network of about 200 financial institutions that we work with. But the lesser known part of that work is the work we are doing with the regulators, with central banks across countries, to redefine how credit scoring is done, to redefine data systems, to make sure that the regulatory frameworks that govern the ecosystem actually work for women. And the other component that we do is the technical support facility. And that technical support facility comes in many forms. It comes in terms of support to women to women themselves, because sometimes there is an assumption that the biggest constraint for women is capital. Sometimes it's not. Sometimes it's the access to market. Sometimes it's their own capacity to organize. But we also make assumptions about the finance ecosystem itself and their ability to understand women and their businesses. And so part of that technical support also goes to financial institutions in terms of how do you design products that work. If you're supporting women in agriculture, you cannot give a woman a loan today to start a business of chicks, hens and chicken, and then expect at the end of the month that they're going to be repaying. Their chicks are just 30 days old. They have not laid a single egg. So how are they? So even just getting the ecosystem to understand that when you design for women, the women need to be part of it, and the products need to actually align to their specific situation. So that technical support is really, really important. It's around what Janet was talking about, the credit scoring mechanism. Sometimes when financial institutions look at a woman's business, they tend to look at the risk and not the potential of the business. They tend to want physical collateral when the business plan is enough to actually show that this business is viable. So there's a lot of work going on at the bank in terms of changing that whole ecosystem. But I wanted to give you a very second quick example. In November last year, we started something we call the Gender and Macroeconomics Program, because we realized how much convening power we have with African governments to really change how they view women's businesses, because these things are important, because those macroeconomic policies determine who's being taxed and how. They determine how much budget is going to go to care versus how much is going to a defense budget. They determine whether there'll be social protection or not. They determine whether private sector is going to have a conducive environment to create jobs that work for women or not. And so we really are committed to making sure that we are working at the totality of the whole ecosystem in which women actually find themselves, and how that ecosystem actually works for them.
Thanks, Jemima. That's really, those are great points. I wish I could go around everybody else, but maybe I can start just going back to some audience questions, and that way we can kind of incorporate that with the rest of the session, because we only have 11 minutes left. So I'll start with one question. I think it was on collaboration. I think participant mentioned that at the beginning of the session, when Mariana ran a poll, collaboration was one of the top kind of aspects that this community really values. And so the question is, how are you funders collaborating with each other? And I guess maybe if you also have ideas on how we can better collaborate with each other, that's also welcome. So the question is not addressed to anyone, so just open to anyone who wants to take this. And Janet as well, you're not from a funding organization, but you might have great insights on how funders can better collaborate to make your job easier.
I think I can be able to take the first lot on how funders can be able to collaborate. When you look at our balance sheet today at Fortune Credit, we have different funders. Others who are interested in agriculture, we have others who are actually maybe specifically interested in the clean energy conversation. Under the SNOOP program, where we have our funders from Europe, how funders have been able to collaborate in that particular space for the technical assistance is looking at what is it that funder XYZ has been able to provide. For example, if one institution gave us a technical assistant on a credit scoring, then the other organization will be able to pick a totally different tool. For example, how can you choose an agricultural value chain to finance? Then now, under the same conversation, because we have funders, all of them from Europe, and they're getting money from one particular portal, the SNOOP portal, then they're also able to know that Fortune has already gotten a technical assistant on creating an alternative scoring model for farmers. And now they know how to identify an agricultural value chain to be able to participate in. Then the reality is we have one of the funders now looking at what are the other risks that our customers, especially the women in agriculture, facing, and that is the climate risk. And therefore, we've just started another technical assistance on how can we be able to assess the portfolio that we have and what can we be able to do to build the climate risk score in each and every client that we onboard as Fortune Credit. So I've seen a lot of collaboration because there's also transparency that if one funder gives you money, every other person actually knows that you have gotten money. So in the collaboration space, it's also at any given time when you get a new funder on board, then you have to declare to the rest that you've been able to get money and they have to give you a nodding for you to proceed. So I can be able to talk from that point of view where I've seen different funders collaborating and agreeing on the covenants that they have. For example, if a particular lender has given you these covenants, then you need to share with the others so that they see whether they can be able to adopt or will it be able to violate what they have given you. So there's a lot of collaboration in the funding space.
Thank you. Thanks, Janet. Francesca, yeah, I was actually going to call on you.
Yeah, because Snoop was mentioned, of course. So actually, from the donor perspective, Snoop is a program that is funded by Luxembourg, Switzerland, and Liechtenstein. LuxDev is still acting as member of the Technical Assistance Committee. I used to have this position in my previous position in LuxDev. So reviewing the project and so on. And I think it's a great example of collaboration among donors in the sense that, of course, each donor has, let's say, its geographical target or even topic within the agricultural space. But the way the three donors are working together and also negotiating and taking decision on, okay, this is like, so Snoop, it has like a global outreach, specific focus on Africa, but is really open and it's kind of TA facility for TA facilities of impact investors. And the way donors are collaborating in this space, I'd say, is just amazing. But also what Snoop has done is to kind of push investors, asset managers to work together. So to inform to each other, because sometimes they invest in the same organization about TA and so on. So this is the way we try to collaborate together. It's not always easy, but I think Snoop is really a great example.
Thanks, Francesca. Luz, did you want to come in on this? Or I know that your organization also has a lot of partnerships and relies on partnerships and collaborating with other organizations.
Yeah, I mean, I guess that, just a couple of points, in terms of donor collaborations, I think it's so important for institutions like a CGAP to kind of bring donors together on different topics, the different types of stakeholders. So I think kind of building that muscle around knowledge. I think somebody said, we don't need to be reinventing the wheel, especially in scarcer times. And so being able to kind of cross-pollinate what we're learning. Obviously, I gave the example of our partnership with DFI ADB on trying to mobilize capital, but I think we're seeing more of an interest in potentially co-funding opportunities in this environment too. So we've been trying to cultivate that a bit more.
And maybe a question back to everyone, because sometimes collaboration is just great in paper and it sounds great, but sometimes it also creates a lot of need for coordination and creates a lot of extra work. So in your view, are we getting better at knowing how to collaborate more productively, or is it still, are we still at a stage where we're saying we're collaborating, but it's really still, it's the same kind of old approach?
We've been collaborating better. The biggest risk, of course, is that when there are cuts in funding, that the risk of competition rather than collaboration also increases. So I think as a community, that's something that we need to watch out for, that with reduced funding, that we do not end up competing, because there's so much to be gained from collaboration. I think at the bank, because we have such a clear mandate for the work that we do, it's been quite easy to partner with others. So, for example, because we are not a commercial bank, we are a development bank, it's been very easy to then, collaborate with commercial financial institutions, with fintech, because they do provide that last mile of access to women. We've been able to collaborate very well with the funds, with guarantee funds, because we can provide risk-sharing mechanisms. Part of our FAWA, for example, is a risk-sharing mechanism with the African Guarantee Fund. Because we are not technically on the ground, we are able to support business development service providers who then work directly with women entrepreneurs. We are able to collaborate with organizations like CARE, like UN Women, who are directly working with women's cooperatives, who are operating within that informal space. And I think sometimes that clear mandate really allows us to figure out who do we want to collaborate with and how do we collaborate with them. We've also been keen, especially for women entrepreneurs, that we are not just talking about debt. And so we also are innovating a lot with others in terms of how do we provide equity, how do we provide that first loss payments, how do we, we're more able to innovate as a result of those partnerships, because then we are constantly thinking about what works for different partners and what works for different purposes. But I think, we are able to collaborate with insurance. We have a big program on financing the agriculture sector. That's a collaboration with those that are working on climate insurance. So that clear mandate enables us to do that. But I think my main message is, even as funding becomes more critical, that we really keep an eye, that we remain in that collaborative and not competitive mode.
Thanks, Jemima. This has been a great conversation. I wish we had more time, but we have just 1 minute left, and the team and I, we're going to go over the questions after the event and see if there's anything that we need to address and get in touch with you via email. But this was really great to have you join. And thanks so much for connecting and for being candid. And this is a really important conversation and topic. We really hope that we will continue this conversation, both within FinEquity, but also FinDev more broadly, because this is clearly there's a lot of challenges that we face that are ahead that we need to work together on. So I just want to thank you all, and want to hand it over to Mariana, because we have another great couple of hours with a lot of interesting sessions. So thank you. Over to you, Mariana.
Thank you, Valdete. Thank you, Valdete. This was a very powerful and great discussion, and fantastic panelists, by the way. We heard how founding priorities are evolving, how collaboration and working together like a soccer team. I love that metaphor. To achieve a common goal can help the entire sector, and this brings to our next discussion, shifting from commitments to implementation. And in this conversation, we will look at what it takes to turn commitments into practice and what is actually working on the ground. And I'm delighted to hand it over to my colleague, Gayatri Murthy. She's CGAP's gender lead, who will moderate this fireside section. Hi, Gayatri. Over to
Hi.
you.
Yes, hello. Hi. You can hear me well, right?
Yes, correct.
Okay. Yeah, good morning and good afternoon and evening, everyone. I'm really excited about this very fireside lightning session that we have for the next half an hour. We are going to be focusing, as Mariana said, on action. So we're in a environment, as we all know. Theme of today is a moment of constraint, a lot of hesitation in doing big things, but the moment couldn't be more urgent for women's financial inclusion. In the panel today, we are going to be looking at 3 examples at very different levels on how do you actually take collective action to women's financial inclusion? What does that look like? What are the challenges that come about? And what can we learn as more and more countries and more funders go into this mode of operation? With me today are 3 really interesting and esteemed panelists. I'll introduce them one by one. Joining us first is Wendy Telecki, who is, as we all very well know, the head of the WeFi Secretariat. We'll be focusing on the code today, but the WeFi program is a very large and prominent initiative on women's financial inclusion, especially for women entrepreneurs. Also joining us is Ibtisam El Anzoui. She is the Deputy Director for Financial Inclusion at the Central Bank of Morocco, the Bank Al Maghreb, and is also related and leading a coalition in Morocco around women's financial inclusion, which we'll learn about more. And finally, Ana Karen Espinosa, who is the Financial Inclusion and Gender and Literacy Deputy Director for the Ministry of Finance and Public Credit, Mexico. You are also leading a community of practice with financial institutions in Mexico around institutional reform. So we'll be hearing more about that as well. Since we don't have much time, I'm going to jump right into it. And the way we'll go is I'll ask questions to each of the panelists. We'll come together on a few themes. And if we have some time for an audience question or two, I'll be sure to include it. So let's get started. Wendy, I think I'll start with you, given that you will bring a very global perspective to this conversation. The WeFi code, as I understand today, is operational in 33 countries. And you're getting ready to get started on another big phase of the code and expanding to, I think, 3 times more the countries that you have today. I just wanted to take a moment right now to ask you, So the code is largely, it's a commitment, it's about reporting, and it's about innovation that a variety of institutions could go through, both government, financial institutions, and you have MDBs as implementing partners. So reflecting on the last few years, what do you think has worked best about the model? And what do you think has that you got right about how you've set up the system in place? Over to you.
Thanks so much, Gayatri, and thanks for having me here. It's great to be with the FinEquity Network. And thanks for the question. You know, when we started the We Finance Code, WeFi had, I guess, been around for 5 or 6 years. We've done a lot of work with individual financial institutions through our partners, which are the multilateral development banks. And so we knew there were a lot of good solutions out there, and we felt like we were doing a good job at the institutional level, but we really realized that this topic that was very heavily talked about in the last panel on coordination, systems change, you know, everybody working together to see, you know, the same objectives get realized was missing from a lot of the work that we were doing. So the code really was a way to bring country, you know, financial systems together towards a shared objective of getting more finance out the door for women-led businesses, both micro and SME. And I think that's the very beginning, is making sure everyone in the financial system has that shared objective and is working together at the same time towards addressing it. And so building country-level coalitions was really incredibly important for moving this forward. We also built the code as a flexible framework so that countries could adapt it in different ways that they wanted, and they can really, you know, decide what made sense in their own context, because there's already a lot of work going on. There are different leaders in different countries, and so really making sure that they could customize it and own it in their own way was really important. And critically, in the flexible framework that we designed, there are 3 core elements. And I think this is like the secret sauce of the code. We have 3 pillars: the champions, the data, and the actions, that all partners in a country that sign on to the We Finance Code have to commit to. And it's those 3 pillars that really create the reinforcing incentives that get everybody moving in the same direction. So the champions are critical. It's those individuals, all of you on the call, the people in the central banks. We work very, very closely with central banks in almost every country, the industry associations that are helping bring together their communities to address the financing issues. Those champions are really playing a huge role in terms of getting the commitments, getting the actions, getting the data in place. And without those people who really hold the accountability for their institutions, the code would not be able to move forward. But the second pillar is data, and all partners in the code have to collect data points on how much financing is going to women entrepreneurs. We have 5 core data points, and countries can decide to add more data points. And the data, we're very proud to say we're getting our first year of baseline data collected this year. We'll have about half of our initial cohort of 33 countries reporting their baseline data. This is off of OECD previously only having 2 countries reporting their overall financing data for women-led SMEs. So it's a huge jump. And we hope next year we'll see that number grow from 14 to 33. So once everybody in the system, including the regulators, the banks, the microfinance institutions, they're all pushing in the same direction to get the data, that also adds to that level of accountability and focus on what needs to be done to serve women entrepreneurs. And the data, really, really importantly, what we need to be thinking about now with the data is not just how to collect it. And I saw some questions on definitions, really important to get country level definitions in place. That's all very important in the first year, but ultimately we want people to use the data for regulatory purposes. You know, what is it telling us about what policies need to change? And also the financial institutions to really be able to use the data to design better products, to understand their customers more effectively. So data plays so many roles in building incentives for the system. And when everybody's got the data, it makes a huge difference at the systems level. And the final pillar of the code after champions data is the third pillar is action, which is really where we're trying to incentivize the financial institutions to create gender bonds, to do new financing lines, to do new technical assistance, to do better research on human-centered design. All the things that you all are talking about that hard work that needs to happen on the ground in the institutions. We're working with the African Development Bank. We're working with donors like the Gates Foundation to help us, think through what the tools are that are needed on the ground. We're working with the World Bank and like the IFCs of the world to get more blended finance and technical assistance out to really support the action pillar and give those financial institutions the services the support that they need to improve their products and services, and also mobilize additional capital, including from our partners, the multilateral development banks. So all of this creates a system of reinforcing incentives. It creates ways to hold each other accountable for doing more to serve women entrepreneurs. And it creates opportunities for dialogue and discussion across the system. So maybe there's an issue with the credit bureaus or the firm registries, or it might be that there's new tools needed on collateral registries. These things can come out of the conversations and the coalitions that we're building at the country level. And then we also bring the global knowledge, the global expertise, peer learning, sharing opportunities across the champions, so that just like FinEquity, we can really make sure that what's happening in Mongolia is helping the people in Uzbekistan figure out what they need to do, or Dominican Republic is, sharing something that they've done with Kenya. Or this week we launched the code in Colombia. So if anybody from Colombia is on the call, welcome to the code. So we're really excited about that. But let me just stop there with that picture of this system of reinforcing incentives that we're trying to create to improve coordination, to improve and create more ambitious goals, and to really incentivize actions that are going to change the trajectory of how women are receiving finance.
I really liked what you said about the system of reinforcing, but I want to pick up on one thing you said around the global exchange, because I think what happens when you have so many countries in the mix is you, as I've spoken to you before about, you begin to have this cohort of leaders and champions across the world that actually can learn just as much from each other as from, or maybe even more from each other than from, institutions like yours and mine. So how does that look going ahead for you in the next phase of the code? What kinds of learning do you see these cohorts of champions do with each other? How do you see the kind of global benefit of having as many countries in the mix and many more?
Yeah, so already with the code, we do a lot with our national champions. Those are the people from the central banks, the industry associations, some of the financial institutions. Usually it's like 3 to 5 institutions in each country are national champions. And that we have a community of champions that meets regularly to talk about what's working with the code, what more can be done. That's usually virtual, but we also have annual convenings and regional convenings sometimes for these groups. And we just see the energy and the feeding off of one another that we can get when, everybody's trying to solve the same problems at the same time. So they're learning in real time. Some innovation is happening in one place and it's being picked up elsewhere. As you mentioned, we are now excited to be moving from our pilot phase, which is, we originally thought would be like 8 or 9 countries. Now it's 33 countries. And in the fall, we expect to launch our scale-up strategy. We hope to get to 90 countries. And so as part of that scale-up strategy, we're really trying to turbocharge this idea of peer learning and sharing information across institutions, across countries, and globally. And so we will be creating something called the We Finance Academy, which is really built to systematize the training that we're making available for code countries, so that what we're, the knowledge and expertise in one country can easily be picked up and used and shared with the institutions that are, in code countries, in code coalitions, in other places. So we're working with our partners, the World Bank and the other MDBs, a number of our global signatories like CARE International, Women's World Banking, the Financial Alliance for Women, OECD. We're trying to bring together expertise so that this becomes not something that, you have to hunt and peck for, but you can really make available very readily for training and also for cohort-based learning and for also supporting the champions, really making sure at the institutional level, we convene a lot, the national champions, but we want to also make sure that the institutional champions at the country level are coming together in cohorts, opportunities to learn, grow, become better leaders. And so we're trying to build those programs so that they have access to that kind of training. We're also going to be doing a lot more on data and dashboards and use of data. How do we make sure we can kind of turbocharge how we're doing that? We've got now so many good experiences from the pilot phase. We want to make that available more systematically across the network. And then also, of course, sharing more about what the innovations are. We'll be doing innovation challenges and really trying to surface the best examples of new products, new services, so that, again, it's a lot of the last conversation that Greta was saying and Jemima and others, that once we know something works in one place, we're just not doing a good enough job of making sure others have access to those models and can easily replicate it. So the code actually helps with that because we're able to find those great examples and share them. And with the FinEquity network, I should say as well, and the CGAP, which is a really incredible partner for us, an important partner for sharing all of these experiences. So,
yeah, thank you. I'll come back to you, Wendy, as we close. Let me go now to looking at deeper country experiences. We have two guests who directly represent two governments. So I'm going to come to you, Ibtisam, first, which is to Morocco. The CGAP kind of project that we've all been coordinating over is about creating country action models, very similar to WeFi, although operating on a much smaller scale. But would want to understand from you around the working group for women's financial inclusion that you have created as part of your National Financial Inclusion Strategies second phase. Morocco is a country that has made a lot of big strides in financial inclusion, but the gender gap has been a big focus for the future and will be for the strategy. What you've been able to do is really bring together almost the entire financial sector, 90% of all the financial institutions in your country, to come into a collective dialogue on women's financial inclusion. And I wanted to understand from you, Ibtisam, how do you connect the incentives that a central bank has with its financial sector? Like what have you learned from kind of bringing your vision and the vision of individual financial institutions together? What has come up for you there?
Thank you, Gayatri. Thank you for the invitation and thank you for the question. I would like actually to first underline that over the last decades, Bank Al Maghrib played an important role in driving financial inclusion initiatives based on participative approach, gathering public and private sector stakeholders. As part of this journey, I can say that one of our key lessons has been that the central bank's power as a regulator and as leading financial inclusion in Morocco is critical actually and crucial as an enabler for this process. It creates actually the conditions for institutions to come together around a shared agenda and vision. However, achieving sustainability and tangible results also requires a broader set of factors, as shown by our experience, including a clear value proposition for each stakeholder, a strong governance, including appropriate monitoring and evaluation tools, and a shared commitment to outcomes. This is why the Moroccan Coalition for Women Financial Inclusion was implemented within the framework of the National Financial Inclusion Strategy, looking for a lasting and productive collaboration, especially when it comes to the contribution of financial institutions. So how? By ensuring that each partner, whether it's from public or private sector, sees benefits from the coalition's collective agenda, given its own mandate, strategic priorities, and incentives. We believe that without the alignment, participation may remain symbolic rather than results-oriented as we are looking for. So what we learned is that the coalition helped to shed light on business opportunities for financial institutions and new practices in terms of approach and methodology. By introducing actually innovative approaches and methodologies to better understand customer needs as a prerequisite to design customer-centric solution, the coalition is actually helping shift the paradigm from viewing inclusion as a social objective to recognizing it as a strategic business opportunity. So this message gained significant traction through pilot initiatives conducted with 2 Moroccan banks as part of the preparatory phase of the coalition, which provided tangible evidence of the value of a human-centered design approach. And this was beyond sharing international case studies. These pilots generated concrete local examples showing how the approach can uncover underserved market opportunities, reveal unmet customer needs, and this way launch an evidence-based process where financial institutions can translate insights into viable products and services. This exercise is actually outcomes and testimonies strengthened the coalition's narrative and reinforced members' confidence in the approach. So we learned also that we have to face challenges, even though the next or the coming steps are exciting in terms of learning and in terms of following the feedback from financial institutions. And here I would like to share that as part of this coalition, we launched the design lab activities around 3 focus areas for capacity building and support, which represent an important offer of this coalition for the members, especially financial institutions. So we are focusing on 3 areas: gender disaggregated data, HCD, as well as internal culture and process. So the design lab revealed a real commitment from the coalition member institutions who were called to mobilize their own teams according to specific criteria and to start the work towards transformation that must lead to concrete roadmaps and targets with specific deadline. So it's a challenging for financial institutions, and as they have seen actually the value added of this coalition, they are still committed and they are engaged fully in this process. So what we are looking for is that to have the output of this process in order to feed the National Financial Inclusion Strategies Action Plan, and also quantitative goals to set as part of the second phase of this strategy. So this part reflects actually how individual commitments from financial service providers should align with collective agenda and national vision for financial inclusion. As the central bank, we play a pivotal steering role on both fronts in this approach. So on one hand, we ensure that the coalition mobilizes the right expertise, tools, and methodologies to effectively support institutional change and accelerate the adoption of customer-centric practices among its members. On the other hand, we work to ensure that the participating institutions remain aligned with national financial inclusion priorities and broader development objectives, as the national financial inclusion is looking for contributing in social and economic development of the country. Beyond coordination, our role is also to foster collaboration and unlock synergies across the ecosystem, particularly between public and private sector stakeholders, so that collective efforts translate into greater impacts, scalability, and sustainability. Finally, I would like to emphasize that the Moroccan Coalition for Women's Financial Inclusion is only the beginning of a broader and more ambitious journey in Morocco. So the experience has demonstrated that there is a value of bringing together diverse stakeholders around a shared approach, especially the HCD, and leveraging customer centricity to address specific barriers to inclusion. Building on this momentum, we intend to extend this model to other priority target groups identified under the National Financial Inclusion Strategy, namely rural population, youth, and very small businesses. Our ambition is to replicate and adapt this collaborative approach to better understand the needs of these segments, foster innovation, and accelerate the development of inclusive financial solutions that leave no one behind. So these are mainly the lessons we learned from this experience and how we intend to build on that in order to move forward.
Thank you, Ibtisam. And I think in the previous panel, a lot of questions were raised on what role central bank can play. And I think your answer here is a really great example of that, especially with areas like human-centered design and innovation that are considered aspects of what financial institutions do within. But I think you're showing a really great example of how the central bank can make a market do that across the financial sector. So that's really great to hear. And that takes me to Anna Karen, which is also a community of practice, similar collaboration between the public and private sector. But Mexico is at a very different moment in its market. And I think what's really interesting that you're doing is you are helping the financial institutions actually change on the inside and bring about institutional reform based on some of the guidelines that you have published for women-centric financial inclusion. I really wanted to ask you about this experience of really galvanizing or inspiring financial institutions to actually undergo reform. So you have them go through a scorecard and really assess themselves and where they are. How do you keep that momentum going between how they see themselves and getting them to actually change? What have you learned from that, or what are you looking forward to putting in practice there?
Thank you, Gayatri, and thank you for the kind invitation. It's an honor to be a part of this panel. And one of the most important lessons we've learned is that self-assessment is only valuable if it becomes a catalyst for action. The scorecard process helps institutions to identify strengths, gaps, and opportunities, but meaningful change happens only when those findings are translated into concrete commitments. So action plans, follow-up mechanisms, and sustained leadership supports. And here I want to share, in Mexico, we have been able to test this approach through the Interinstitutional Committee for Gender Equality in Financial Entities called CIGEF. And it's a multi-stakeholder platform coordinated by the Ministry of Finance that brings together public financial institutions, development banks, regulators, and other actors from the financial sector. The committee serves as a space for collaboration, peer learning, and the exchange of good practices to advance gender equality and women's financial inclusion across the financial ecosystem. Through this committee, we have established a community of practice focused on implementing the Advancing Women's Financial Inclusion guide that we work with the World Bank and IFC, CIGAP. And participating institutions are using self-assessment tools to identify strengths, gaps, and opportunities, and develop institutional roadmaps for strengthening their policies, products, services, data collection, practices, and governance mechanisms related to women's financial inclusion. And one of the key lessons from this initiative is that institutional change is more likely when institutions are not working in isolation. By bringing together organizations facing similar challenges, the community of practice creates a safe space where organizations can learn from each other's successes and challenges, exchange practical solutions, and maintain momentum throughout the implementation process. In many cases, seeing peers make progress becomes a powerful source of motivation and accountability. Discussions within the community of practice have also highlighted some common barriers. So many institutions struggle with limited or under-utilized sex disaggregated data, weak data governance, and a lack of clarity regarding who should lead the process internally. And we also found that building a strong business case is critical to mobilizing the leadership, particularly when institutions can demonstrate the long-term value of women customers in terms of profitability and loyalty and growth. Beyond data and process, organizational culture and internal capabilities also matter. Gender awareness, cross-functional collaboration, and leadership commitment are often the factors that determine whether an initiative moves from the intention to implementation. Another important lesson is that sustainable change requires commitment from different levels of the institution. Technical teams play a critical role, but progress accelerates when senior leadership actively sponsors these efforts. So in fact, some self-assessment have triggered strategic conversations with executive management on issues such as gender gaps, workforce development, and opportunities to better serve women clients. It is important to say it without ownership from senior management, even the most robust self-assessment is unlikely to generate lasting institutional change. And for countries interested in create a similar national learning community, one of my advice would be to focus on 3 elements. First, provide practical tools that institutions can immediately apply. Second, create opportunities for peer-to-peer learning and collaboration. And third, establish regular follow-up mechanisms that allow institutions to track progress over time. And ultimately, the goal is not simple. We already know that. But to complete a self-assessment, the goal is to create a continuous improvement process where institutions learn, act, measure progress, and learn again. But for change to sustainable, institutions must take ownership of the process and embed into their internal practices and governance structures and decision-making process too. Otherwise, even the most promising initiatives can disappear as priorities shift for our leadership changes. And that is what helps transform the reflection into a real institutional change.
Thank you, Anna Karen. And I really like that you added advice, I think, for your peers in other countries who might be implementing something like this. And I think there are lots of common themes around what Wendy mentioned around self-enforcing mechanisms, or what you mentioned around follow-up mechanisms. And I really think what we're learning here is it's far beyond the commitments. I think the architecture and the frameworks that each of you have put in place have been really key in the experience and success you've been having. We've been given 3 extra minutes to conclude. I just wanted to give you a minute each, I think, to give us one quick piece of what are you most looking forward to in the next phase of your work? So both Wendy at your level of several countries, but at each of your markets in Ibtisam and Anna Karen, what's the one thing that you're looking forward to in the next phase that will be, I think, yeah, let me close it there. What's the one thing you're looking forward to? So I'll start with Wendy, you first, and then a minute each for all of us to go into the next session then. Thank you so much.
Thanks. And just so great to hear about the Morocco and the Mexico experiences, which we watch very closely and are excited to also share lessons with what they're doing. In our case, we are excited that we'll be launching our scale-up strategy. We hope this will make the code more robust and more scaled. We aim to get to 90 countries, so it's really ambitious. And we see both developing countries and developed countries also interested in joining this family. So that's really exciting, but really the really exciting thing is how we can deepen the impact. So all the things that we work on, champions, data, and actions, and this collaborative work, it really depends on getting changes into the financial institutions. And to do that, you need better incentives, you need better TA, you need better lessons of experience from around the world to help figure out what the right mix of services and products are. And so the work that we're doing with our scale-up strategy, we were also doing an evaluation just to see what's working and what's not, is really about getting stronger commitments. We have already about 500 financial institutions that have signed on to the code. And in all of our 33 countries, we're working with the central banks and industry associations. So we have that community. We know we can build those coalitions, but we really need, every single institution to be thinking hard about really ambitious goals and how to get there. So, we're looking forward to a new round of funding to help, support some of these incentives. And really get more tools into the hands of all of you, those decision makers who are really thinking about how to do a better job in your countries to address your institutional challenges, but also the systems challenges that are keeping you from being able to really do the job that you want to do, so that we can address those issues at the institutional level and at the systemic level, and bring the global resources and knowledge also to bear. So we have a big growth agenda. We're excited in this environment. I know this was kind of a theme of the previous panel, to be actually helping move things forward. And we're excited just to see the resonance of these issues and the excitement that's happening on the ground as countries are trying to move forward in this area. So we're happy to be able to be a positive force for good on this.
Thank you, Wendy. Thank you. 30 seconds, if there's anything you'd like to share as we close, and then 30 seconds to Anna Karen. Thank you.
Yes. So for us, the next steps, as I mentioned earlier, is that we consider this as a learning process. So we want to keep working as parts of the design lab in order to support and build capacities of the financial institutions till they prepare their action plan and can create actions based on the HCD approach that will feed later the National Financial Inclusion Strategy roadmap. Then we want also to explore synergies with public sector institutions. So we know that targeting women markets requires investments from financial institutions, but we also believe that working with public sector will help to foster change and make the process easier for both, especially as part of the National Financial Inclusion Strategy. And then scalability is important for us, working first on the Women Coalition as an experimentation and, as I mentioned, a learning process. Then we want to produce actually the same process with other underserved target population, mainly rural population, youth, and very small enterprises. Thank you.
Thank you, Trisam. Anna Karen, last word to you.
Yeah, thank you. I think I know that we are on time. So if I have to leave one message, it will be this: collective action is not simple about bringing institutions together. It is about creating the structures, initiatives, and accountability mechanisms that allow them to work together over the time toward a common goal. When governments do that successfully, they can turn individual efforts into a lasting system change. So the final message is for my part is that, and I want to look forward to continue this important conversation during day 2 tomorrow here in Mexico. And we hope to see many of you there as we continue working together to advance women's financial inclusion. Thank you.
Thank you for being such great hosts for us tomorrow. And you couldn't have ended it better. So thank you so much. Back to you, Mariana. Thank you.
Thank you, Gayatri, and thank you to our panelists. In fact, yes, we are going to be able to see the community of practice in action in Mexico City tomorrow. And we are expecting the 300 practitioners that will join us on day 2 of our convening. Then we're going to move forward then because we are a little behind the schedule. So what's here clear today is that commitments really matter, but what really counts is how they translate into systems, products, and solutions that work for women in practice. So to help us unpack this further, we are now moving from reflections to applications, and I'm pleased to introduce Rati Kant, Senior Director from Women's Entrepreneurship and Market Systems at CARE, who will help us connect the dots across some of the key topics that we'll be discussing in our workshops next. So over to you, Rati.
Thank you, Mariana, and so nice to be here. Really appreciate the invitation to be able to open this session with you all. So I'm going to talk a little bit about a few themes that we're going to be discussing in the breakout session. So as of now, we know that 7 in 10 women now have an account, and many of you are responsible for that growth in this community. But hundreds of millions of women still remain excluded, as you all know, and not enough capital is flowing to them. So the question for all of us is no longer just how many women have access. It's more about, can women actually use the financial services in ways that lead to more resilience, opportunities, and agency? And I'll be honest, I know many of you here in the audience, and we've been asking, how do we go beyond access even a decade ago? So we're now also talking about the end game as financial resilience and health, which is great. And so the workshop themes today are set up to drive this goal. So the first one is around product design. And if you know me, you know that I'm passionate about product design. And we know that women have accounts, but they're still less likely than men to be saving formally, borrowing from formal institutions, or using digital payments. And that's because uptake and usage really depends on whether the product was designed to actually fit their lives. And women face unique barriers: less collateral, thinner credit histories, less literacy, less mobility, more unpaid care. So you can't just turn a product pink and call it for women. Yet too often, that is what's happening in our markets. Providers turn the product pink, more money is spent on marketing campaigns instead of doing the actual upfront product design work and really understanding the pain points that would make the products usable and successful in the market. So they need to be affordable, they need to be trusted, they need to be convenient. Greta mentioned how large of scale the informal financial services are for women. Why? Because they are designed to fit their lives. SACOs, VSLAs, and all those services are convenient and cheap and easy. So in our work with banks and MFIs and fintechs, we have seen that women-centered design and intentional product design, it's not a nice to have. It's definitely a commercial discipline. And the formal providers that we are working with and those who are winning are the ones that start from women's realities and design the account, the credit, the pricing, and the channel around them, the full customer journey experience. So women do not need to be fixed to fit financial systems. We need to really think about how financial products and systems need to be designed to fit the realities of women's lives. The next theme that we're going to look at is gender data, excuse me. So what we do not measure, we cannot design for or be held accountable for, right? So many of the informal savings groups out there don't have any digital data records, and yet there are billions of dollars moving through these informal systems. Women are saving, lending, repaying, and practicing healthy financial behaviors, but nobody can see them. And gender disaggregated data, as Wendy brought up earlier, it's not a side report. It's the basic infrastructure, because without it, women are invisible as well. Informal institutions still can't answer very basic business questions. Who are active clients? Why are women dropping off? How are women-focused products performing compared to the rest of the portfolio? These aren't gender questions. They're the business questions that actually lead to revenue, retention, portfolio quality. So ultimately, data is what makes women visible, so providers, funders, and regulators also can adjust products, policies, and investments based on real behavior and real women's behaviors, not perceived risks, not perceived behaviors, not assumptions. And so instead of designing around an invisible average client, or dare I say it, the male client, we really need to look at this data and think about what would work for them. The next theme is financial health. And we've talked a lot about Findex as well, and it's been giving much more attention to financial health instead of just inclusion. So It's more about whether people can raise emergency funds and manage stress and be resilient, and less about the raw account numbers alone. So we have to move beyond counting accounts and loans and really ask, are women actually less financially stressed? Are they able to raise money in an emergency? Do they lack confidence in their financial future? How do we build that confidence? How do they cope with the shocks? And in our own work, when we work with partners to design and deliver that suite of products for women, savings, credit, insurance, mentoring, training, digital skill building, the non-financial services, we see that women are able to improve their resiliency. And for the financial service provider, it also deepens relationships, increases cross-sell, and keeps women in their portfolio over time. So financial health is both the ultimate goal, the why the use matters, and a very practical way to think about long-term value for the financial service provider. The next one is social norms. We're going to look at social norms today. And in many markets, it's not just products or channels that shape women's use of finance. It's the norms around who can sign, who can own, and who decides. So those norms show up in very practical ways. Who does the unpaid care work and has no time? Who's allowed to travel alone? Who can put property up as collateral? And who is allowed to take on risks? Typically, the answer is not women. And these issues may look gender neutral on paper, but in practice, it excludes women even before they start. I'll give you an example around mobility. We were testing some products offering electric scooter financing to women entrepreneurs, and women saw the value immediately. But uptake stays low because affordability, the complex processes, safety, and most importantly, family approval all mattered. And the product matters, but so do the conversations at home. And that's something we need to look at. And for regulators and providers, that also means looking at how rules on collateral, KYC, or co-signers may bake those norms into the formal systems. And for all of us, it means bringing men and households into the conversation and treating care and household dynamics as economic issues, not the side issues. The next thing we're going to talk about is funding. We've been talking a lot about funding and why there's more commercial capital now, and everybody said that they needed more funding. And women-owned businesses still face a huge financing gap, even when they perform well. And one reason is how the money behind all this is structured. So who takes the risk, on what terms, with what collateral, for which segments. And so when all the capital is very conservative or has to come from the financial service provider, it pushes them towards the familiar clients. And it keeps sort of the women-centered products at the edges. So a provider might say it's not worth it to us to serve women or to serve rural areas. So we need different types of capital to have different roles to get the capital flowing there and to get the FSP in the game. So when we use guarantees, blended finance, or performance-based funding, they can share more of that early risk and give institutions a little bit of room to get into those new market segments and design and adjust products to actually fit the reality of women. And it's not necessarily about just sustainable capital. So it's unless providers also invest themselves. So they need to be in this game, right? So we've seen guarantees for 20 years, right? But they need to use their own balance sheet, and we need to innovatively structure those contracts to make sure that FSPs practice new behaviors. We have to use data. We have to intentionally design so that they continue to serve the segments after the subsidy or after the guarantee is gone. And I really do think that grant capital can be catalytic. So by some of our work, we've been working with FSPs to intentionally design products. And we've unlocked more than 500 million in loans from FSPs using 10 million in grant capital. That's a 50 times multiplier. So we want to keep thinking about the roles for different types of capital and how they fit together sustainably for women in markets and keep capital flowing to them. The last theme is AI, and I see the screen up, so I think I'm off. But many of you are already using AI for credit scoring, alternative credit scoring, KYC help, customer support. So digital and AI can definitely extend financial access, but it can also deepen exclusion. So for women, what I want us to consider today is that we really need to think about what we can do to keep them safe, as well as get them onboarded onto these digital and AI products. So how do we get women into digital financial products is one question, but what is the right next digital financial step for these women in these contexts, their level of readiness, and what protection must come with that step? So as we move into these workshops on product design, gender data, financial health, social norms, funding, and AI, They're not six separate things that are happening. These are the six levers that we believe can actually change the game. So the invitation over the next 45 minutes is to get practical about what's working, what's not, and what each of you, whether you're at a bank, at a fintech, a central bank, a donor, a regulator, or an implementing organization, what you will take back to ensure that when we talk about financial inclusion for women, we're not just counting accounts. We're designing and funding products and systems that actually work for women. Back to you, Mariana.
Thank you, Rati. This has been a great framing. So now you have the context, and you will be able to choose between the 6 workshops that we will have. If Abby, we can move to the slide where we have the instructions on how to join. Dan is going to help us to create the 6 workshops, and you will be able to select which workshops you would like to attend. So it's already on the screen. If you would like to attend workshop number 1, that is the one that is going to remain in the main plenary. It's the one that is going to have Spanish translation. So you will, if you speak Spanish and would like to, to stay there, you can be on workshop number 1. So you can select. You can see there in the screen. You can go. Step 1, you can click on more, then choose the breakout room, and then join. Number 1 will be in the plenary, number 2 on data, number 3 on financial health, 4 on gender norms, 5 on gender lens investment, and the last one on AI and digital finance. So let's go and enjoy and learn a lot. We will be there for 45 minutes until we come back to the plenary. So Danny, please let us know if they are already in process. I think so, right?
Yes, all the breakout rooms are open, and I see already some people joining. So feel free to join the workshop you prefer.
Perfect, thank you.
For workshop 1, we stay here. You don't have to go to any room.
Okay, I see that we have already more than 100 people joining the breakout rooms. So perhaps we can already use the main session now for the workshop number 1.
Okay, so let's begin the workshop number 1. This is designed to be a very practical session, so we'll try to make it very dynamic. We have great speakers, Veronica, Sara, Rati, and Angela, that will share with us real experience from real implementation of products aimed to attend women. So welcome to this session, and just to take advantage of our time because we are a bit late, let's begin. So we want to have this session grounded in real world experience, and the discussion has to become based on the experience of our great speakers. So we will begin first with a Slido question, just to understand how you feel about what is still the biggest challenge in serving women effectively. Abby, can you place the QR?
Yes, I'm going to share that
So
now.
we want to use this Slido to raise your ideas, and then we will ask our speakers to react and to share their experience. So, okay. Here we are. If you can join with the QR code and answer what is still the biggest challenge in serving women effectively. So please. we'll give a couple of minutes and so up to now, understanding women's reality seems to be the more voted reason as the biggest challenge to effectively serve women. And that fits exactly what Rati was saying in the main comments. So I think Rati, you did a great job.
Did I influence? Did I
Yeah,
influence a little bit?
I
Maybe.
think so. So let's take one more minute here, and then we'll go to ask our speakers what they think about this and how they are using the issues about understanding really women's realities and how that has a role to play when they design and implement financial products. Well, we'll stay here. I think half of the people answering are saying understanding women's realities, but the second most mentioned issue is customer trust and engagement. And I think confidence today is a key issue for not only for women, but mainly for women. So for sure for women. So let's go to our speakers then and begin the conversation. I will ask our three speakers to use around 3 minutes each and provide us with practical examples, lessons, and honestly tell us what did not work, because actually that's the main learning experience comes from what we know did not work. So our first speaker is Verónica Gavilanes. Verónica will speak in Spanish, so if you want to listen in English, please go to the three dots and translation or interpretation and put English, so you can listen to Verónica's participation in English. And the main question for her is, what changed when Banco Sol intentionally designed for women clients? As you know, Banco Sol is a major institution in Bolivia and has been intentionally going to serve women. So, Verónica, please.
Gracias, Carolina. Un gusto saludarte y verte, y también a mis compañeras de panel. La verdad es que Bancosol es un banco que opera hace 34 años en Bolivia, enfocado en la inclusión financiera. Y hace 3 años decidimos ser intencionales con el cierre de acceso a servicios financieros a las mujeres. Entonces, ha cambiado básicamente la forma en la que operamos estratégicamente. Es decir, comparto mucho lo que se habló en la sesión plenaria. Teníamos que abordar esto desde el más alto nivel estratégico. Entonces, lo primero es cómo la organización se prepara y se transforma y se trabaja en cultura, en mindset, ¿no? Para atender al mercado de la mujer, porque tienes que guardar coherencia. No le puedes hablar al mercado de la mujer si no te has alineado y la organización ha comprendido los porqués. Hay que integrarlo, y creo que hay un ejemplo muy práctico, es que dentro del programa Avanza Mujer, que nació en el 2023, hemos comenzado con todo un alineamiento interno. Una estrategia intencional, un análisis del caso de negocio y una escucha efectiva a nuestras clientes. Paralelamente, en el pilar interno hemos lanzado la estrategia de diversidad, igualdad e inclusión, y hemos caminado de manera coherente tanto en la parte interna como en la parte externa, en un proceso fantástico de aprendizaje y de entendimiento. Respecto a la pregunta que se hacía previamente, comparto, cuando se pone intencionalidad, en comprender la realidad que vive la mujer desde el comportamiento, desde la norma social, desde la necesidad. Es fantástica la información, obviamente, que se rescata y se puede diseñar una oferta que al principio no debe ser necesariamente perfecta, puede ir evolucionando, sino que ponemos foco en donde vemos en principio que hay la mayor oportunidad. Y en nuestro caso, a pesar de un banco, de ser un banco que operaba con un impacto muy grande en el país, teníamos todavía una brecha de acceso al financiamiento y de digitalización. Entonces, creo que hemos centrado los primeros esfuerzos y también hay una lección, no querer abarcar todo, sino determinar qué es lo más importante. Entonces, lanzamos todo un proceso de digitalización de la organización y hemos lanzado al toque como una solución para que la mujer cobre y pague de manera fácil, rápida y segura. Y esto ha sido fantástico porque nos ha permitido duplicar el tamaño de clientes del banco y triplicar la digitalización de las mujeres en un muy corto tiempo. Creo que ese es un aprendizaje esencial. Sobre la base también de esta intencionalidad, hemos trabajado para emitir el primer bono social etiquetado en género en Bolivia, también buscando un efecto demostrativo al mercado de capitales y la verdad nos enorgullece mucho que lanzamos el primer bono en el 2024, también educando al mercado sobre cómo las inversiones tienen que tener este impacto. Tuvimos sobre demanda en una situación macroeconómica compleja que atraviesa el país y el año pasado lanzamos el segundo bono. Son bonos locales. En el primero nos acompañó IDB con el 50% de garantía y creo que ha sido una experiencia extraordinaria. Creo que, digamos, algo que tenemos que poner mucho lente más de que no funcionó es que tal vez dos cosas. Primero, en la parte interna se requiere mucha conversación y alineamiento y obviamente comprensión y escucha también cuando implementas una estrategia de género por las normas sociales existentes. En Bancosol algo cambió fundamentalmente y es la participación de las mujeres en las posiciones de toma de decisiones. En el 2021 no había ninguna mujer en las gerencias nacionales y hoy somos del 50%. Ese cambio importante, digamos, en el management también requiere de mucha conversación porque no se trata de excluir a los hombres, se trata más bien de incluir a las mujeres tanto en la mesa de toma de decisiones y el aporte es espectacular cuando tienes un equipo diverso. Mayor retención, mayor atracción del talento clave, sobre todo el digital y joven, y también obviamente una comprensión de que esta estrategia es el negocio per se, capturando un valor importante para servir a las mujeres.
Gracias, Verónica. Thank you, Verónica. Now we'll move to care. Rati and Sara are here and they have this amazing playbook that has allowed to improve the design of financial products. So please, Rati and Sara, can you really provide us with concrete examples on how this playbook can really help designing financial products or services that truly meets the needs of women entrepreneurs?
Thank you, Carolina. Yes, we brought two examples for you today. And if I haven't met you yet, my name is Sarah Hewitt, and I'm the director for Strive Women. And the two products we're going to share today were developed using our women-centered design methodology, which has been documented in the Strive Women playbook. And if you don't know Strive Women, it's a 4-year program supported by the MasterCard Center for Inclusive Growth that supports the financial health of women-led micro and small businesses. So the playbook is a resource to help practitioners design financial products and services specifically for women entrepreneurs. And it's developed from the tools that we use at CARE, but also from many of you on this call who contributed. And these tools are based in tried and tested human-centered design principles. And they are also unique in that they have these women-centered design checks. So we always include the gender lens. And we've also included AI prompts to help you get started and to do this work faster. So I'm going to share the 1-minute story of VP Bank, which is a commercial bank in Vietnam. CARE and VP Bank had worked together for several years, but at the start of Strive Women, we started with the first step in the process and we aligned. So we had this ambitious goal to serve 3,000 women entrepreneurs in 12 months. Spoiler alert, we doubled that impact in less than half the time. And it was because this process really works. So after we align, we move to the discover phase, and we go and we talk to women entrepreneurs and to potential clients. And we understood from the entrepreneurs in Vietnam that if they were going to do all of this paperwork to get a loan, they wanted it to be a larger loan size. They also wanted it to be more digital. They wanted to learn digital tools. And so through their ideation process, step 3, we tested a package and landed on a number of products in this package for women entrepreneurs that included collateral as well as uncollateralized loans. Also, larger loan sizes, and that was based on the data that we saw, which supported that decision. We offered a credit card that had longer repayment cycles to smooth cash flows. We offered digital payment gateway and some non-financial services and training in response to the demands of clients. Phase 4, step 4 is to design for launch. And so we worked with the staff within VP Bank to train them on selling to women entrepreneurs, so some specific gender training. But we also launched an internal sales competition that really incentivized staff to make progress. And the results you already know, it exceeded expectations, and our champion at VP Bank said that the women-centered design really delivers not only social value to women entrepreneurs, but also the sustainable business value. So this may look like a very smooth process, but in reality, you go back and forth. It's much more iterative. And we have a second example, so I'll pass it over to Rati.
Thank you, Sarah. So I'm going to move us to a little bit more of an agricultural context in Peru, and with a institution, a rural microfinance institution serving smallholder farmers and entrepreneurs called Fondecerco. And so Fondecerco had a strong base of loyal clients, but the portfolio wasn't growing with new clients, and that was sort of the goal at that stage. And so one of the key phases here is align, and I think this is a phase that is often skipped. So we got clear and very quickly realized and dug into what success actually means for them. It meant more rural women entrepreneurs on the books, not just volume from the same clients, right? So really getting down to some of that detail is important. And we agreed with the CEO and leadership on a concrete target. Let's reach 1,000 rural women entrepreneurs in 1 year. It was a small target, right? But that clarity from the top gave us real backing from the very top and helped us surface the secret decision maker, as we call it, right? It's somebody inside of the institution whose buy-in we need from day one, and whose buy-in you need to get regularly. So there's always a secret decision maker, probably in your lives as well. So get to know them early. And so when we moved into the discover phase, we saw some familiar issues that we see with women. There were complicated disbursement processes, loan terms that didn't match the agricultural cycle, and that's a very common one. And as we got deeper in, we found 2 big barriers built into Fondecerco's own policies at the institutional level. And first, there was a rule that capped loan growth, so a client couldn't get a second loan if the new amount was more than 50% higher than her previous loan. So on paper, this is actually about preventing over indebtedness, right? Like let's not give out too big loans to people that can't handle it, right? But at the end of the day, what ended up happening is that women who understandably started with these tiny loans could never grow, even though that is sort of the pattern that we want to see, right? We repay and we grow, we repay and we grow. So even with perfect repayment, they couldn't get a loan large enough to really invest in their business. So that is really a lesson in examining our own the rules, the risk management, and instead of fighting against what could be business growth. Secondly, there was a deeply ingrained culture of requiring a husband or another male relative to be a cosigner. And many people in Latin America are nodding because this is quite common in some of the markets there, and in markets globally as well. So they don't have their own financial identity. So in the ideate and design phases, we co-created a product called Fonde Mujer, very intentionally branded Tu Nombre, Tu Crédito, which means your name, your credit. And we didn't just simplify paperwork. We actually worked with the policy and risk teams to remove those growth ceilings. We worked on aligning repayment schedules with the agricultural cycle, which is really important for cash flow, and added grace periods during low season, while eliminating that male co-signatory requirement. So when Fonde Mujer launched, women could actually walk into a branch, get a loan based on their business, their own reputation, and with repayment cycles that actually match their cash flows, which is often something that is missed in the product design. So within 7 months, Fondicerco had more than 600 active clients and nearly $400,000 dispersed. And 20% of those women were brand new clients. So I'll remind you again, it was about getting new customer acquisition. And so in the small pilot, that's a meaningful size. And existing women clients also could finally grow their loan sizes. So retention started translating into higher value for both the women and the institution. So great case there.
Thank you, Rati. Perfect timing. Let's move to Angela from Women's World Banking and talk a little bit about how we use evidence to improve our actions. So, Angela, what are the barriers that institutions and ourselves still underestimating when serving women?
Thank you very much. Happy to be here, honored to be here to speak about these issues. I think I want to react to the poll, the first 2 points that came in as barriers. One was on understanding women's realities. And my reflection on this is, so there's a question of, is it that institutions do not understand women's realities? There's one. Or they may understand but lack the capability or know-how on how to design for the realities, or also the willingness, because it could be expensive to design, as compared to maybe other options that institutions may have in terms of investing their resources and getting faster returns. So I think there are a couple of issues there. So when it comes to understanding, I feel there has recently been a lot of talk about, what are the realities? So, limited collateral, time constraints, social cultural norms. I think there's been a lot of talk about women's reality. So my question is, we know, we have been reading, it's written all over. What are we doing about it as institutions? Do we have, and we find that sometimes institutions, there are challenges in terms of capacity to design for this. So, when you're going to an institution and telling them, okay, can we, instead of using physical collateral, let's look at introducing a cash flow-based lending product. And that requires, certain knowledge and expertise around risk management, which some of the institutions or the staff may not have. And that's why they fall back easily on collateral and physical collateral. So there are those aspects to address this problem. When it comes to also willingness, so for, in some cases, especially when you're designing for women may require more, we've seen that they may require more hand-holding with regard to using solutions that are created by formal financial services, financial institutions, but are the institutions ready to provide that hand-holding? Or they want customers who can easily read complex documentation, complex terms and conditions, and move on with the product. So I think, to me, the question goes beyond understanding the realities to actually having the capability and willingness to design for those realities. And then the other point was on customer trust. I think this is a big one for women, the trust and confidence to engage in formal financial services. And we see, and this is why, we see that they're still more comfortable operating in the informal groups or semi-formal groups, the VSLAs, the SACCOs and all, because, they trust each other, they understand, what they're doing within those groups. They have confidence to engage with their peers, but formal financial institutions can be intimidating. But what efforts are FSPs making towards making this easy for the women to access, feel comfortable to access, not feeling intimidated. So I know an example of one of the mass market banks here. There are simple things that they had to do, even changing the terminologies in their documentation. So instead of using, say, complex language like debit and credit, which means something different when you're coming from a banking perspective versus an accounting perspective. And if you're serving people who, may not be very familiar with those terminologies, what other terminology can you use? And this bank just decided to label these as cash in and cash out in their bank statements instead of credit and, So, it's making those kinds of changes, what institutions can do. I think there are other barriers beyond those that were mentioned that sometimes are overlooked. So, for instance, when we are coming to, we are in this digital revolution and we all want to adopt digital technologies. But then we have seen that, as we adopt digital technologies, we are also getting more and more women left behind because of aspects like, solutions may require smartphones. We have fewer women with smartphones as compared to men. So some of these things are, FSPs may not be really thinking about as they introduce innovations is how do we make these innovations accessible to women in their current realities. We worked recently with an institution that wanted to have more of their women clients adopt a digital platform. And when we went and, to engage to diagnose this, the situation, understand the realities of the women, we realized that a significant percentage of the women did not have smartphones, so they could not adopt the digital platform. And a huge investment had been made to roll out the platform. Okay. When it comes to things like distribution channels, and of course, like here in Africa, agent networks have been a big thing, and they have done well in terms of getting services closer to the people. But then you go into certain communities because of the social cultural norms. There are places where there's restrictions of interactions between men and women. And so if you have, or even movement, so when you have these channels are available, yes, the agent networks, but if they are mostly run by male agents that are stationed in the town center, they may not then really work for women in those communities where there are movement restrictions and restrictions with interactions between men and women. So I think just the nuances of the barriers, going deeper into understanding the realities and designing with those realities in mind.
Thank you, Angela. Great examples. And yeah, for sure, the devil is in the details. So I would like to ask our attendants to help us and let us know, what do you think that is stopping women from actively using financial services after using a savings account? So Abby, if you could put the Slido here. So we can go to this next question. What do you think? What in your experience has been happening that we have so many women that have an account, but they are not using it? What are the main factors that are affecting the usage of the already existing accounts for women? Well, trust is the word, lack of trust. Yeah. Yeah, going to Angela's point, digital capabilities also are really something key today in using several of these accounts. Some people are typing, so we'll give an extra minute. Yeah, for sure, daily use of money, cash flows, fears, distance to physical providers. Yeah, and cash being really still. Okay, let's move to the next question, which is which of these barriers are still most underestimated by financial institutions? Based on your experience. Oh my goodness. Trust and confidence. Social and household dynamics. Okay. Well, so household dynamics and trust and confidence and time constraints, that's a big one for several women here. So let's move to next round of our speakers, how they react to these questions, and we'll come back to the poll in a second. Veronica, so what did Banco Sol have to rethink once you understood these realities of women's financial lives better?
Sí, definitivamente. Obviamente también una comprensión importante es que las mujeres son súper heterogéneas, ¿no? Distintos momentos de vida, distintos momentos del ciclo de negocio de las mujeres, distintas realidades respecto a la digitalización y me encantó la pregunta anterior a la adopción de soluciones integrales financieras. Entonces, la verdad es que ha sido un proceso supremamente interesante, pero cuando tienes el lente intencional, entonces, tratas de entender sobre todo las brechas, ¿no? Y no nos hemos quedado solo en lo numérico, en la desagregación y en la evolución de tendencias. Tenemos obviamente unos objetivos súper bien trazados y nuestras metas corren en un balance scorecard que es transversal para todos los líderes de la organización, porque es nuevamente no una estrategia aislada, sino una estrategia central del negocio. Creo que ese es un aprendizaje muy importante. El caso de negocio de las mujeres está muy comprobado por el valor de ellas per se como clientes bancarios. Y tal vez cuando hablamos del sector financiero en general, todavía falta esa intencionalidad y esa comprensión. Y sí creo que pasa porque hay que seguir impulsando la diversidad de pensamiento en de pensamiento y de género en las posiciones de toma de decisiones. Un tema súper interesante es la velocidad del crecimiento de la cartera de las mujeres, que para nosotros se vuelve una fortaleza institucional en nuestros resultados de performance. Si vemos la velocidad desde que lanzamos el programa hasta acá, es 64% mayor. No porque dejes de atender a los hombres, sino porque pones el ente en el mercado subatendido o desatendido. También muy interesante el comportamiento del ratio de ahorros. Las mujeres definitivamente es súper consistente el caso, ahorran en porcentaje más que los hombres. En Bolivia obviamente hemos atravesado unos años de coyuntura macroeconómica compleja y en general se ha reducido cierto porcentaje los ahorros de hombres y mujeres, pero las mujeres a pesar de haber sido también afectadas siguen ahorrando consistentemente más que los hombres. Un tema del uso del tiempo es clave. ¿Por qué las mujeres no utilizan los servicios financieros? Porque para ellas el tiempo es oro. Entonces, cuando diseñamos de una forma simple, ágil, esta adopción, nosotros tenemos un caso extraordinario en Bancosol. Nuestra solución al toque es hoy por hoy número uno en saldos y la segunda en cobros y pagos. hemos pasado de 1 millón de transacciones digitales a 44 millones de transacciones digitales. Entonces, ahí están las mujeres con una participación muy interesante por una sencilla razón. Le hemos resuelto un tema de tiempo. Uno, dos, sus negocios venden más. Consistentemente hemos visto que la persona que dispone su QR, porque todo es a través de un QR, genera obviamente más tráfico en su negocio y vende más. Y algo no menor que también hemos aprendido es que la oferta complementaria de servicios de valor agregado, donde el componente de educación, el componente de herramientas prácticas y de desarrollo de capacidades es extremadamente importante. Hemos tenido un aprendizaje en adecuar la oferta de acuerdo al ciclo de vida del negocio y obviamente a lo que requiere el negocio para seguir desarrollándose. Aquí no hemos ido solos, esto es otro aprendizaje, no tienes que hacerlo todo tú, hay aliados muy importantes con los que se puede trabajar, es construir un ecosistema alrededor de las necesidades de las mujeres. Y el tercer punto es la medición. Y ahí yo quiero rescatar la medición que hacemos con FinEquity, que precisamente hemos participado en el piloto global y todo lo que es la emisión de los bonos de género, que son casi 8,000 mujeres beneficiadas, tienen esta medición de impacto con la herramienta de empoderamiento económico de las mujeres de FinEquity, que nos ha dado también hallazgos interesantes ya en una segunda medición, sobre todo en los temas de la autonomía de la mujer en el momento de tomar decisiones financieras, que es tremendamente importante, ¿no? Porque eso refleja también autoconfianza. No es solamente quedarte con los números, sino complementar también con la información cualitativa que recogemos permanentemente. Un aprendizaje extraordinario. Estamos compartiendo en el chat también las 2 guías sobre los materiales en los que ha participado Bancosol junto con Unipify, ONU Mujeres. Se han desarrollado 2 guías muy interesantes, la una específicamente para bancos, que se llama Avanzando en la Igualdad de Género y el Empoderamiento de las Mujeres. ¿Cómo hacemos que los sistemas en los que operan las mujeres se vuelvan obviamente accesibles para ellas y cómo cambia el ecosistema alrededor de entender el potencial de la mujer como cliente bancario?
Gracias, Veronica. Thank you, Veronica. Let's move quickly to Sara and Rati because we are getting very tight on time. But how does the playbook really help institutions to uncover these barriers?
So there are 2 parts of the playbook that I think are most impactful. The discover phase helps you analyze data, but also helps you go very deep with field guides, individual interviews, focus group discussions, and customer journey maps that help you understand for that specific segment of entrepreneurs in your specific context, why do they say yes? Why do they say no? All along that customer journey. And that surface level data isn't enough. You have to go deep and listen to women. Second is in the ideation and testing phase. You have to take those insights back to entrepreneurs, to clients, and get that rapid feedback and understand from frontline staff and from potential clients what's working, what's not working, and iterate. And that combination of a discovery phase where you listen deeply plus the real world testing and iteration will get you to the redesign and the product that you need.
Thank you. Rati, you want to add something? No? Okay. Let's move to Angela. Angela, you already told us about several barriers that appears in the market, but which do you consider to be the one that consistently appears across the market?
Well, I think all barriers are cross-cutting, and some are more prevalent than others. So I'd like to just maybe call out trust and confidence as one that I think may be overlooked by financial institutions. And that's cross-cutting. We know from our work, research, and also from our work that women are more risk-averse or risk-aware. They require more hand-holding. They are more relationship-oriented as opposed to just transactional-oriented. So, and all these are aspects that link to the issue of trust and confidence. So I think that's one I'd like to call out, and institutions need to create strategies to build trust and confidence amongst women for them, with women for them to be able to take up their services. And this can be done through, the human channels, like let's say leveraging female agents in communities where there are those restrictions of male to female interactions, bank relationship managers to interact more with women beyond just the transactional, engagements. Simple communication in terms of the collateral that is used at the financial institutions, marketing collateral that has imagery that reflects the target market for them to feel that this is actually our product. So that just and also consumer protection policies, for instance, accessible grievance redressal mechanisms, very key for and especially with the digital disruption and the risk of fraud, very, very important. So to me, trust and confidence is a big one that needs to be looked into.
Thank you, Angela. Yeah, I think trust is something we really have been not working as deep as we should. We have only 5 minutes left, so I will skip we had an additional poll to make, but I will skip it. I just want to ask the 4 speakers for a final comment on what one thing we should really, really start doing differently tomorrow. If we could provide that insight in your experience based on the tools you have developed in the recent experience you have, what you will say, please, we need to do this in a different way if we really want to address women's financial needs. Let's begin in the opposite way, maybe now. Angela first.
Okay, great, thanks. I think I would say, in addition to understanding women's realities and building with them and for them, I would say we also need to go beyond just the product features into thinking about the full customer journey. What are the barriers at awareness, knowledge, adoption, active use, advocacy? So looking at the whole customer journey and designing solutions at each stage.
Thank you, Angela. Rati and Sarah? What do we need to do differently?
So use the women-centered design methodology because you'll get those commercial results for your financial institutions. The women's barriers are structural. Don't try and change women. Try to address the high interest rates, the loan sizes, the repayment terms that just aren't working. So women-centered design is the method that will help you remove those barriers. And as Angela said, design with women, not for them, and you'll find that sustainable business value.
Thank you. Rati?
Yeah, thank you. What Sarah said, no, I'm just kidding. What Angela said was really important is that there is actually, it's the customer journey, right? So when we think of product and we talk about product, we're talking about the customer journey. But in my many years of working with FSPs, we see the same story. We can get a great designed product and you drop it into a system. Business is not bought in. The staff are still not trained. They're not measured or rewarded for this new product. So women-centered products can't actually scale and create the real business value that institutions want to sustain these products unless they do change some of their behaviors. How are they trained? Which KPIs they're measured against? And the strongest results from our partners is when product design is actually matched by shifts in staff behavior and delivery systems. So, and you're having that training, this all leads to commercial outcomes. And one of the things that makes that happen is actually having real intentional conversations with the financial service provider from the beginning to say, how are we aligned? How are we going to get to the same goals? So I'd encourage that level of institutional change to really get this to stick.
Thank you, Rati. We are out of time, but Veronica, this is music to your ears because this is exactly what you're doing now. Intentionality, changing the model, changing the KPIs. Final comment, Veronica.
Sí, tal vez solamente desde el punto de vista de la oferta, estoy muy de acuerdo con lo que ha mencionado respecto de las mujeres, ciclo de vida, entendimiento, pero creo que las instituciones financieras tenemos una tarea pendiente. Y ahí, si algo podría ser mañana, es influir en los boards, en quienes toman la decisión y también ser intencionales en que más mujeres participen en posiciones de alta dirección.
Great, thank you. A lot of thanks to all of our speakers, and sorry we are running out of time, and we have now everybody into our room, so we are very popular. Thank you.
Let's start with a conversation. And this first round of questions for all panelists will focus on how different actors are better utilizing gender data to improve financial inclusion outcomes for women. And let's start with Luis Treviño. It's already quite late where you are. So Luis, can you share with us some tools available to financial authorities to strengthen the use of gender data for policy, supervision, regulation, maybe market discipline? Maybe you can share some AFI initiatives at this front or some outstanding examples of authorities that have utilized data effectively.
Okay, pero thank you very much, Juan Carlos. Indeed, it's really a pleasure for me to be in this event. As well, for those that don't know me, I'm Senior Policy Manager of Financial Inclusion Data in the Alliance for Financial Inclusion. In the Alliance, we are more than 80 financial regulators and policymakers. So we provide a platform for generating knowledge and also sharing knowledge, especially related to policies to enable financial inclusion, right? So, we coordinate this. We have 7 working groups in AFI. So these 7 working groups are focused on different policy areas. One of them, of course, is data, right? And we call it Data and Impact Working Group. Financial Inclusion Data and Impact Working Group. And in this regards, we have been, focusing and sharing knowledge related to data, and especially on gender disaggregated data, right? So our working group was, I think, one of the pioneers. So I don't know if you can call this since 2016 or even a little bit earlier, there was this interest to understand what was happening, right, between financial inclusion in the different specific target groups that are more vulnerable, and women was one specific group, right? So since 2016, the working group started to develop some tools and also to identify practices to gather better data on and have more granular analysis between men and women, right? In financial inclusion, what are the gaps, like what are, what's going on there. And we developed different, starting by, of course, the demand side surveys. That was I think, one of the basics, right? When AFI was founded. And still they are very important, right? Having demand side surveys to understand the landscape on financial inclusion on population, but especially on the administrative data, right? Because the administrative data, the one that's reported to regulators, to by financial service providers and by other regulators, it's the data that allows to understand that provides, first of all, a more frequent and granular data, right? It allows to provide to understand how it's being used, how the financial services are being used, right, by the users, right? And since 2016 up to now, the range of indicators have evolved, right? So at the beginning was very, very simple. The collection, the focus, just, hey, let's understand the percentage of women and men having accounts, etc. But now, increasingly there has been more attention in different aspects, rather, especially understanding more the barriers that especially women might be facing, right, in terms of this. So we have developed, as you mentioned, some toolkits. We have been lately, we developed a toolkit related, especially focused on MSMEs, and MSME woman-owned MSMEs. We do this in a consultative process. We went with the Wi-Fi code, with the FAO, the Financial Alliance for Women, and with others to also get their because they are working also on this, right? On especially on MSMEs. They help us a lot to identify some key additional indicators to really help and also try to provide some guidance with our policymakers, right? The one that are in our network, but also with other stakeholders, right? Because this also is not only a work from the policymakers and regulators. It's a work that involves the different stakeholders, financial service providers, other providers of services related to financial services, right? That are maybe not directly providing financial services, but provide, for instance, agents, right? Are very important. So we have been developing some tools. We developed a policy model where we try to condense on gender. This policy model was on gender. I will share later the reference, where we try to condense the different practice, some case studies and some knowledge where our network have been able to support women, especially from the data perspective, right? So yeah, I will stop here, but yeah, I can continue for hours.
Luis. No, really a range of initiatives that we really appreciate, because I think you're also sharing good practices among members of AFI and putting the information out there around case studies, and this is very useful for the community. So please feel free also to share links on the chat, as this would be, I think, useful to the audience. So now let's go with Zulita, who can share another perspective on this front. So Zulita, how do you see the role of market facilitators, third parties like AIR, in terms of powering national efforts to improve gender data collection, analysis, usage? Maybe you can share some initiatives or tools that AIR has developed.
Thanks a lot, Juan Carlos. And I wish we could do this discussion in Spanish, but I think I'm the only one from the speakers not proficient enough. And hello from warm Madrid. So if you don't know me, I'm Zulita. I'm program manager at the Alliance for Innovative Regulation. I used to work at AFI as well, and it's really good to reconnect with everyone on the call today. And just to give a bit of background on the Alliance for Innovative Regulation, or AIR, we are a nonprofit organization, and we really aim to bridge the gap between regulators and innovation through the responsible use of new technologies. And we work on topics such as financial crime, financial inclusion and health, and also modernizing financial regulation. So as market facilitator, I would say, and that's also the like of CGAP and AFI and other organizations, we could really see the importance of focusing on supporting on all the diagnostic dimension, understanding data bottleneck, where does it bring some issues in terms of collection, usage, analysis, and all. So that diagnostic part that I can develop a bit further in terms of what we are doing at AIR. And then I think something we've heard a lot in the different session of this event is really on the stakeholder convening, collaboration, coordination, and I think we can have a really active role in that field. And finally, and maybe that's the most important, is really how we can translate data into action, also like a topic we've heard quite a lot today. So concretely at AIR, we have this gender disaggregated data, or GDD program, that we have started last year. We work with different entities and different countries, focusing on how to improve the GDD process. And when we focus on the diagnostic support I've mentioned, so we really try to start the whole project with a really in-depth research landscape and behavioral analysis. And for that, we use the tool that was developed at AIR recently, which is the Innovation Elements Framework. So it's like a survey, organization-wide survey that can be deployed within the regulatory institution. And that helps to gather really specific insight that can help to understand a bit better all the enabling environment, and also identify the different system constraints and opportunities at the regulator level. So that helps to build the foundation really on any GDD activity, and just to make sure they really are as focused as possible and efficient to deploy for the next steps. When we speak on convening and coordination, so I guess GDD is really not a new topic. A lot of excellent work has been done at national levels and also international levels. So for that project, we built together a global advisory group, trying to convene as many actors as possible to build on all those existing best practices and also to avoid repeating activities. And I think like the tool you just shared, Juan Carlos, and also the ones we heard from Afi are really building the foundation of the work and trying to build on those existing resources. And then when it comes to translating data into action, so with all this like basic foundation and stakeholder coordination, now we are working specifically, for example, with 2 countries in Nigeria and Tanzania, and we will implement so-called sprint events. So sprint event would be like hackathon event, if you wish, that we invite a lot of different stakeholders to ideate against really specific problem statement. So for example, with Central Bank of Nigeria, they do have a dashboard in place in Nigeria, and we are trying to see now through an in-person sprint with a lot of different participants, how this can be improved for better usage for financial service providers. That's an example. The other one with Bank of Tanzania is really how we can build together and co-create activities to lay strong foundation for the dashboard they are planning to develop soon. And to support those in-country activities, again, always linking back to international collaboration, we just launched yesterday a global virtual sprint that will be open to all participants. Happy to share the link later on. And there we'll invite, again, really different stakeholders in the regulatory, IT, policy work, NGOs as well, to ideate against topics such as AI and GDD, the human stories behind the data, and finally, again, linking data with the market providers. And maybe just a conclusion would be all those activities, we really try to leverage those into some like user-friendly platform. And together with those sprint events, we've launched like a global collaboration platform that is a virtual website, basically, where you can connect and join your sprint environment, whether you focus on Nigeria or the global activities, and where we've saved a lot of resources, again, like the ones you have shared earlier. And that creates also a collaborative space to have this innovative way of ideating against problem statement. So that would be the introduction on that topic. Thanks, Juan Carlos.
Excellent. Thank you very much, Zulita. And please also share the link in the chat, as I'm sure many people will be interested in checking all this information online. And these are good segue, since you've mentioned all types of stakeholders. So we can now hear from Gabriela in terms of the perspective of financial institutions, how they have strengthened collection, utilization of gender data, especially in the micro-inclusive finance sector. So maybe, Gabriela, you can share some examples from Fundación Microfinanzas, BBVA, some successful applications of these insights.
Okay, thank you very much, Juan Carlos, for the invitation. Well, first of all, to give a little bit of context to those that doesn't know about us, we are a nonprofit organization created by BBVA in 2007 to promote the sustainable development for people living under vulnerable conditions. We operate in 5 countries in Latin America: Colombia, Panama, Chile, Peru, and Dominican Republic. And nowadays we serve more than 3 million low-income entrepreneurs. Women represent 64% of the people we serve, but they only account for the 50% of the loan disbursements, sales, and assets. And to continue talking about the significant social and economic barriers, we evaluate that 78% of them are vulnerable. 1 in 3 live below the national poverty line, and nearly half of them are heads of single parents household with dependents. And they also, their business are also concentrated in lower productivity sectors like retails and services. But well, all this data also give us some opportunity, because we have seen over time that women that receive loans, when they receive loans, they receive on average 2/3 the size of the men's loans, but after a period they generate 20% higher returns. So this means that they are highly more efficient than men, that it's like a very good opportunity. And that's why measurement is so important. And since 2016, more or less, we have been investing a lot in data collection and data analysis and gender disaggregated data across all of our 5 institutions, because we believe to make progress, we need to have the evidence and understand pretty well all of these differences. And another knowledge that we learn on all this period of time is that we need to move beyond that one-size-fits-all approach. We need to define a specific, we have to identify specific groups of women entrepreneurs according to factors like, for example, age or education level, location, household composition, economic activity, digital access, or other aspects, because this is a key so that we can design products and services to really respond to their needs. And we have like various examples of this. For example, we have developed a lot of microinsurance for specifically for women, covering, for example, some women's type of cancer or other diseases that normally they weren't included in microinsurance. Or, for example, we launched a specific program in Dominican Republic 2 years ago because we identified the women have really low levels of digitalization. And this program combined digitalization, digital training, mentoring, access to finance, and all in a holistic approach. More than 5,000 women participated in this program, and we could measure that after doing the program, they have an increase in more or less 22% of their sales. So this is a good evidence that with the specific products and services, they really can make a difference. So, well, I think this is why we think that the value of having gender data to help us understand inequalities and to design these practical solutions.
Excellent. These are very interesting data points, and it confirm like what we've seen, we've heard, or we've assumed that women in many cases perform much better than men, but are subject to unfair discrimination, either in size of loans, approval, higher rejection rates, higher interest rates, etc. But it's another thing to just see the data that yells at you and tells you this is what's happening. So thanks for sharing all this information. Also the positive aspect of programs that can really help empower women. So I'm checking the chat. I'm not seeing questions yet. I encourage people to really go ahead and make any question or comment on the chat, and I can go back to you. I know sometimes we get a bit shy, so I'll give you a bit of time, but maybe we can go ahead and start the second round of questions. Now, focusing more on challenges on gender data collection, usage, and dissemination, and how concerns, gaps, risk perception may differ across actors. Now let's start with you, Gabriela. What would be some of the main issues that you can see in terms of financial institutions, or the sector facing in terms of gender data collection, utilization, maybe even reporting?
Well, I would like to focus the response in how data can be used to understand and ultimately help to close the gender gap. And I think one of the biggest challenges that we have in microfinance sectors is the gender bias. So, well, we have studied a lot about this, and according, for example, to IDB, most of the financial institutions, they have some degree of gender bias in their lending process. And there are a lot of evidence that women loans applications are more likely to be rejected. They require longer evaluation periods, and they are more frequently subject to reductions in the amounted request. And in general, women also receive smaller loans. I think it's like 14%, more or less, the average lower, that the lower amount that they receive in comparison to men. and they are also required to provide more collateral than men. And well, so we decided to make an analysis to see how are we performing in our institutions. So we conducted a gender bias study last year ago in alliance with the IDB Invest and with one of our banks, the one in Dominican Republic, Banco Adopen. So how did we do it? We analyzed information between 2022 and 2024, more or less more than 1,070,000 loan transactions for men and women. And we selected loans that were same size, same sector, because we wanted to analyze if there were really differences in the loan amount, the interest rate, the repayment terms, the approval times. And well, we had a very positive surprise because in Banco Adopen, we found that we do not have gender bias. We think we do have, maybe we have them in another entities, but Banco Adopen had really excellent results. We have evidence that women even requested a larger amount of loans, and on average they receive 4% higher amount of loans than men. They also received longer repayment terms, approximately 4%. And well, the analysis also indicates that women loans were more profitable than men. In other words, that women loans portfolio delivers to be higher profitability with a lower risk. So that was very, very interesting results. And well, as I was mentioning, I think this is a very interesting exercise to analyze. Data can give you really good results, really good evidence about what's happening, and it's key to have this data to really challenge the problem for not having gender bias in your institution.
Thank you, Gabriela. Again, very interesting data points, and good to see that the analysis showed that no gender bias. Very good, but a very important initiative in terms of actually doing the analysis and going beyond assumptions to action. Now, Luis, from your perspective, what are the main types of challenges that you see authorities facing, maybe infrastructure, skills, risk considerations in this area?
Thank you, Juan Carlos, and well, of course, especially, I see there are challenges, but more recently, I see a lot of opportunities, right? I see, especially, we are now in a new paradigm, right? The artificial intelligence that has, a big debate around the world. It has very no, it can have a lot. There has a lot of risk and everything, but also I think it brings a lot of opportunities, and I think right now, yeah, there are a lot of challenges. For instance, especially on the less developed countries, right, in low income countries where there are not enough resources to have the staff, the technology, and there are some other priorities sometimes than that distract policymakers. In the case of policymakers, on focusing on collecting more of this data that is very important, right? Or trying or convincing institutions to report this data, right? In many countries, still we know that they are still collecting data in a very manual process. Maybe they are not using paper now, but they're still using emails, even if they are encrypted. It's a very it's not an optimal position to have to generate this kind of research that Gabriela was mentioning, right? To really do and understand how is the market, and understand not only general. Yeah, we can have some statistics of the gap and everything, but we need to do this kind of research, going to really more granular data sets, right? But as I mentioned, I think now with the AI revolution and machine learning and all of these resources, there are a lot of opportunities. In fact, right now I'm taking a training personally that it's on the use of AI on machine learning without coding, right? Because now there are a lot of software that allows you to do many of these analysis without without coding. Of course, it's ideal to have all the skills, right? To have to be very good on Python, especially if you are in your data scientist, you have a data scientist teams. But now there are a lot of resources that can help you to really do very good analysis to understand, for instance, this, in terms of machine learning, you can have supervised learning, but also unsupervised learning, and understand, just looking at if you have a good data set, no, and you can collect, if you are able to collect, clean and reliable data, you can do, you can identify patterns, you can identify clusters, especially on gender. I think this cluster aspect is very important. And then you can identify what are the factors that may be, that conducive to help or to support, some policies especially on gender, right? And especially thinking on credit, on savings, and on other transactions, right? So yeah, there are a lot of gaps, but I think there are a lot of opportunities, and also the costs of doing this, this analysis and this, it's getting lower because now there's a lot of open source, right? And also the skills are getting there, right? People, it's really, being trained, and so I have a really optimistic perspective in the next 2 years. I think in the next 2 or 3 years, I have a very optimistic, especially on lower income countries, right? I think it's opening. We need to really, especially from the development side, I think we need to champion and really support this, right? And support these members, because also it's important because also this AI and all of this, if it's not if these skills are not shared equally between countries, then there will be problems, there will be big gaps, right? So I think, in my perspective, that's where this is the opportunity and also the challenge, right? We need to really work more intensely on this. Yeah. One example, for instance, I have, we were just listening to Ibtisam from Bank Al Maghrib in Morocco. In Bank Al Maghrib, they developed a unit. That's an example it's the SME Observatory, and they developed a unit that consolidates data from different stakeholders, including financial service providers, but also from the Ministry of Finance and from other private sector on SMEs data, and they have been able to really have a good understanding and landscape of the MSME sector in Morocco, and now they are also focusing more on gender, right? So I think this is, I think they are coming. There are a lot of opportunities, and yeah.
Great.
That's
No, it's
my,
excellent. Thank you. And I agree in terms of the AI power, and the technology, how it can help address several of these challenges. And again, a good segue to Zulita, who may also have some interesting insights in terms of challenges and potential ways to address them, including from a technology perspective based on AR's work.
Thank you, Juan Carlos. And just before that, I would be really interested to know more about the gender bias study, Gabriela. It sounds really, really interesting. And on the challenges part, I think the few I have in mind really link closely with what Luis has expressed. And I really like how Luis you introduced by focusing on opportunities. And we can build on that. But I think just to regroup a bit, and again, those were really clear findings from all those pre-research we've been doing with different actors, is really one on all this like fragmented ecosystem. Like you've mentioned, Luis, the reporting system, the reporting format, really different tools, sometimes just PDFs rather than using like automated systems, also incomplete and inconsistent gender tagging within the data set that make the comparison and interoperability a little bit challenging. You've mentioned MSMEs as well. I think we've heard quite often also the absence of clear and standardized definition, to just first start by understanding the concept and being able to compare them, which will then help the better usage of those data. And I think I can also relate to the point you've mentioned, Luis, on the busy agenda. There is quite often like really big momentum, a lot of excitement, a lot of new activities and innovative way to tackle those issues, but then it's really on the importance of the longer term, and that's not always easy. Working with institutions that are, for really good reason, extremely busy and that face competing priorities. I think something that we came across quite a lot, and that will be something we'll focus in those like global sprint discussion, is how we can compare a bit better the supply side data and the demand side data sets. It's like really, really different process to collect and analyze the information, and there are a lot of extremely good dashboards, and how we can actually try to integrate those different data sets together. We don't have any solution yet, and I think this is something we'll be really keen on learning from other institutions as well. And the other point also linking to those existing dashboards, that when they are publicly available, I think, extremely important tools at the national level. And quite often they are really descriptive, especially with like publicly available information that makes sense. But how could they be a bit more proactive in the insight generation? And I think, again, to go back to your point, Luis, on all those like AI tools, and how we could leverage on those innovative practices to help with the reporting burden and to improve this like predictive analysis, with of course all the safeguards, not to make too fast decision and conclusion on something we may lack a bit of control on. So that would be a few additional elements, Juan Carlos.
Excellent, Zulita. And I know time flies when you have fun, and I think that's what happened. So we'll do a final round. Then I'll come back with Gabriela with a question in as the second participant, but I'll keep with you, Zulita, briefly. In terms of, and I'll ask everyone to just within a minute share just some examples of collaborative actions, since that was another topic that resonated in the previous conversation in FinEquity's overall plenary conversation with Greta and that panel. So just some good examples of collaborations that you've seen in terms of gender data usage.
Okay, well, I would like to talk about the Wi-Fi code. We are partners of Wi-Fi code since 2024, and also two of our institutions, Banca Mia and Banco Adopen, join also the partnership, and what this has been really helpful for working together with ecosystem actors and developing this gender disaggregated data strategy. And then, for example, another very interesting example is a partnership with the Institution for Care Research in Fondo Esperanza, that they make an evidence showing how informality tends to be transmitted across generations in households held by single mother, and also how migrant women, despite even though having regularized their status status, they continue to still face challenges related to their precarious condition. And a third project I think it's very interesting is the Nugets project that we developed in Peru with the Peruvian Institute of Studies. It was based on a behavioral science, and the initiative seeks to address what were the barriers that women faced when saving money. And thanks to this study, as a result, we have developed a chatbot called Charito, that is a chatbot to help women entrepreneurs to deliver financial education and like in a more interactive way. So these are like very three case studies.
Thanks, Gabriela. Now within just a quick one from Zulita.
Thanks. I mean, I think I will just repeat the few activities mentioned before, but I think this global advisory group that we've put together on the sharing activities and opportunities was really something that increased the value of the whole program significantly. And I've noted from the previous session as well, someone mentioning not only collaboration, but also communication, coordination, and I would even add this like co-creation component that everything we do will like those sprint activities, for example, the more you bring really different parties together, the more like innovative solution you might come across. So again, having regulators working in the same room with IT providers, for example, can really generate those like bit different thinking that can support all the GDD work.
Excellent. And just one last few seconds, Luis,
Well,
for anything
very
that you
quickly,
can add.
just to mention also the importance of leadership, right? Because there's a need to have also leadership to especially on bringing gender right into the spotlight. I think that's important on financial inclusion strategies from on the private sector, from the regulator.
We see even nearing parity in account ownership, at least in some countries or market segments. At the same time, we know that we are only starting to really measure these gaps well with administrative regulatory data and transactional factual data. But nevertheless, we've made a lot of progress. So while there's no room for complacency, of course, around where gender gaps stand, and still a lot of work to do. At the same time, we know that we are in a better position than we were 10, 15 years ago, right? So we can start thinking about really addressing the key question, which is not whether women are included in the financial system or not. Inclusion is a means to an end, but rather whether that inclusion is actually translating into better financial lives through increased resiliency, increased prosperity, increased confidence, increased financial agency in the financial sector and hopefully beyond. So that is what the financial sector can and should do in support of economic agents, citizens, households, entrepreneurs, men, women, of course. Financial health is the goal, and this is what brings us together today in this workshop. But before we dive in, and I turn to my two panelists, I'd like to invite everyone who has joined to take a moment to participate in a couple of polls, short polls. Let me see if I can share them on the screen now. I mean the QR code so you can connect. All right. So you should be seeing now a QR code to participate to a poll, and right next to it, there's a code. If you require the code to enter the Slido survey, and please do. We're interested in knowing, our audience. That will help myself and our speakers to kind of adjust the messages and focus on what seems to be of more interest to our audience based on its composition. I see that some people is already voting. Let's give it 5 more seconds, Valdete, and then if you maybe we can show the results and move to the next question. Let me stop sharing now. Here are the results. Okay, so we have a wonderfully diverse group. Many colleagues identify themselves as working in institutions that don't fall necessarily under any of the categories that we have identified. We have a fifth of the audience comes from the private sector, in particular fintech companies. And then we have an even split between development organizations, researchers, NGOs, and I can't see the count for policymakers. So 7% of financial regulators and policymakers, another 7% of financial service providers. So as I said, a diverse group, which is exactly what a conversation like this calls for, right? Now let's move to the second poll. So let me share again my screen for the QR code. And please do vote on this question. Let's see what our audience understands financial health is. Okay, people, colleagues, keep voting. Okay, Valdete, please go ahead and share the results now, please. Let me stop sharing.
Are you able to see them already or no?
Yes, we can. We can. I can't see the bottom line of the results. So, I can see it now. Okay. Good. So we have a majority of the participants who are already, very well aware of what the global consensus around what financial health is, which is the extent to which people can smoothly manage their daily finances, build resilience against shocks, pursue opportunities, and meet long-term goals. All these feeling confident about their future finance. Okay. And this is exactly the evolution, and the other definitions for financial health that we also shared are closely related to this concept, but have more to do to what financial inclusion is, not really with a focus on outcomes. That will be the second answer that we had provided, ensuring that people have access to a full suite of responsible financial products. So this is more about responsible financial inclusion, but still focus on access and protection, not really outcomes. And then the other alternative definition combines financial stability and wealth building, again, close to, desirable outcomes, but still missing the resilience and opportunity dimensions. And we will see how, however, this connection to consumer protection, responsible financial inclusion, ensuring financial stability, which are all goals and mandates of financial sector supervisors, are actually behind or key parts of a system whereby financial health can become an outcome for the customers and the citizens. Okay, so in the interest of time, let's move to the conversation. We will explore this very interesting issue of financial health for women from three complementary perspectives. First, the global policy agenda and the momentum building around financial health as a shared framework in the financial sector, and why approaching these from a gender lens is so critical, and how we got here. It wasn't easy to coin that definition of financial health under consensus, and Peter will tell us more about this. Then we move to practitioners, the FSPs. What do they see? How healthy are their clients? The female clients, are there relevant differences by gender? And how can they measure financial health? How can they grasp this concept in practice? And finally, we will briefly discuss about the role of supervisory authorities. What can they do to measure and help improve the financial health of financial individuals and households within their boundaries of their mandates? To help us zoom out and understand the broader global momentum behind financial health measurement, I'd like to invite Peter now to share the perspective of the UNSGSA, and in particular the work that Her Majesty Queen Maxima has been so instrumental in advancing, building global convergence around the shared definition of financial health and embedding this key concept in the international policy agenda.
Peter, over to you. As you share your remarks, I'd love for you to touch on two questions, if possible. Why has this G20 convergence around the financial health definition been so significant? And what is the biggest risk if countries continue focusing only on access and uptake metrics in the financial sector? Over to you now.
Thank you, Tatiana, and it's a pleasure to be here. And I see that with our 22 participants, we have a nice cozy group. And so I'm really here to try to answer as many questions and spark a dialogue. So if there's something that you are wondering about, please put it in the chat. I think both the previous discussions throughout the morning and the data from the polls demonstrate that there's already a very high level of understanding around some of the key issues that have driven us towards financial health. And this is really, I think, a natural evolution that, as was mentioned, is looking very much more at outcomes. When we look, one key message is that financial health is truly a universal issue and that we see it around the world, and we see it regardless of income levels and regardless of overall financial sector development levels. The reality is that it is just increasingly difficult for households to manage their day-to-day expenses, to absorb shocks, to cope with the rising costs of living, and to really plan for the future. And this is very much front and center in policymakers' minds. We, as the Office of the UNSGSA, staff Her Majesty Queen Maxima, who's really focused on that senior leadership level policy and advocacy, spending time with presidents and prime ministers and ministers, individuals who are extremely short on time, who may not have all of the technical analysis under their belt, but know that they need to make a decision. So, a few summary statistics. In the UK, 22% of people have less than £100 in savings and investments. In South Africa, over half of adults spend 40% of their take-home pay on debt servicing. And recent data by CGAP and IPA suggests that fraud and scam, which can be a major driver of financial health, has affected upwards of 70% of digital finance users in Rwanda, in Tanzania, and Kenya. So it's this realization that I think has driven this movement towards financial health and this convergence. And, I think we're all well aware of the definition, but really this, I think, is about a natural evolution. In order to work productively on financial health, you really have to have a number of the enablers around financial access in place. And these are largely around ubiquitous and cost-effective digital payments infrastructures that allow people to engage in the formal financial sector and to be part of the digital economy and to efficiently manage their day-to-day needs. From there, you can really start to layer on a number of value-added products, including savings and insurance and credit and investments. And these are all really the products that have some of the most important development impacts in people's lives. And so this is really not an either or, but really an evolution from the first generation of reforms. And Greta spoke about the really significant push that was made on digital payments. That work is far from over, but we are seeing increasingly that digital payments are becoming ubiquitous around the world, and that we also have the policy prescription needed to move forward digital payments quite rapidly, building on interoperability, building on data sharing, building on financial infrastructure, and building on use cases. The financial health agenda is really much more focused on savings and insurance and credit, and it's much more focused on leveraging financial innovation to support better product design. And with financial innovation, we really see three things. One, we see the significant amounts of administrative transactional data that we are all producing every day based on the usage of our cell phones. Two, we are seeing AI, of course, that was discussed earlier, but that ability to customize products We are seeing open finance and data sharing arrangements that are giving providers a much more holistic understanding of people's financial lives, and then they can then use to create more customized products. And we're also seeing behavioral science, and we're seeing that there's an increasing role for nudging and an increasing role for the ability to guide consumers at point of sales, at key life moments, and make small habitual financial decisions that over time can add up to financial health. We also look at financial health really from the micro to the macro perspective. So micro, of course, it allows a sense of stability in the household to really be able to manage lives without undue stress, planning for the future. And this translates into being able to finance school fees. This translates into being able to invest in your micro and informal business. This allows you to do much better future planning and shock management. The reality is people face shocks all the time, whether it be job loss, whether it be agricultural production loss, or whether it be life cycle events, divorce, or other things. And that ability to help people manage through is critical. So there is, and ultimately, particularly with demographic shifts, there will need to be a big push on long-term savings, on investment vehicles. People will need to retire one day. But there are benefits, and that's really in the form of sustainable consumption and investment. And it's also in the form of less overall over indebtedness at the economy-wide level, so healthier balance sheets. And so we are working with the BIS, for example, to really evolve regulatory approaches to not only integrate financial health, but really make the strong link between financial health and economy-wide financial stability. I would just say two closing things. One, I think we have the evidence to suggest that there are strong differences in financial health between men and women. And some of this draws from Global Findex, where we know that women are less likely to save formally. They're less likely to be able to raise emergency funds quickly. OECD survey data demonstrates that women report lower levels of confidence in managing financial matters and making financial decisions. And we know that the lived experience of men and women can vary very distinctively when we look at caregiving responsibilities, when we look at income generation patterns, interruptions in employment, asset ownerships, social norms, constraints to mobility, financial decision-making within the household. All of this really is, I think, the detailed facts that make women's financial health such a challenging issue, and one where I think we are really at the very beginning of. And so I think this conversation, I think, needs to be about trying to develop a framework that accounts for the lived realities of women, girls, and mothers in the household, and then how we actually support with policies and products. And then finally, from the UNSGSA perspective, we really see a role for public-private, but we are doing more work with the private sector under this mandate. And we have seen a really strong business case for financial health, notably through the ability to provide more value-added products, to have customers be transacting more consistently because of the sustainable consumption and investment, a reduced number of NPLs because a financially healthy customer is able to service their lending obligations and their debt levels. And so this is really end product development. So this is really, not just a social objective, but we're seeing through many different digital banks around the world that this really is also about extracting financial value and not leaving money in the market because of poorly designed products that actually hinder people's financial health rather than build them up. Let me stop here. Thank you.
Thank you very much, Peter. You've given us the wide-angle view why this agenda matters and where the global policy community is heading, developing and trying to foster enablers. You mentioned the role of the different stakeholders, global, local, public, private, and I found very interesting your comment about behavioral finance and how, you know, we can leverage, you know, these incentives to nudge customers towards the best decisions for them, but how also this requires an appropriate value proposition from the FSP side, right? And how you are working increasingly with the private sector in this front to ensure that the design of the product is really aligned to what it's meant to provide, so that the outcomes, financial health, really are good. Now I'd like to bring us closer to the ground and precisely to the FSP side, and look at what financial health actually looks like in practice for women. You know, looking at the data that financial service providers generate every day. Marco, I'd like to call you in to share findings from your work in Mexico. That I know it includes some striking insights into differences in women's and men's financial health outcomes. So when you look beyond access and behaviors and trajectories. So Marco, were there findings about women's financial health that genuinely surprised you, or did you already anticipated those? Please do share with us the key conclusions from that analysis.
Gracias, Tatiana. It's a pleasure to be here with you, Peter and Steam, former colleagues, current colleagues, etc. So I'd like to share some lessons from FinSalud, which is a program implemented by BFA Global with support of the MetLife Foundation, which works with credit cooperatives in Mexico to improve financial health of their members. So as the program evolved, a question became increasingly important, which is, are women and men experiencing financial services in the same way? And if not, are our measurement systems or the FSP measurement systems capable of identifying those differences? And to answer those questions, the BFA Global LATAM team incorporate a gender lens into its work, and we combine several complementary tools. So first, we implement financial health surveys that measure resilience, financial stress, perceived control over finances, and the ability to cope with unexpected expenses. Second, we analyze sex-segregated data, looking at savings behavior, credit usage, repayment patterns, balances. Third, we examine customer journeys to understand how women and men move across products over time. Fourth, we conducted a profitability analysis to better understand the customer lifetime value. And finally, we carried out institutional diagnosis to assess how deeply a gender perspective has been integrated into organizational practices, governance, product designs. So using these tools, 6 findings emerge. So the first one is that product adoption improves when offerings align with people's, in this case, women's real motivation. So one of the most important lessons is that the adoption is not only determined by product characteristics, but it is also influenced by how the product is presented, how communicate the offers, and whether the message resonates with women's aspirations and realities. So in this case, through in-depth interviews with women members, we found that women responded particularly well to message framework around peace of mind, autonomy, preparedness for emergencies. For example, the idea of building a freedom fund or a peace of mind fund generate much more stronger engagement than traditional savings messages. I think this tells us two things. So the first one is women trust this institution, and second, there's a significant opportunity to design savings product and communications that better connects with women motivations. A point in case here is that we were able to actually increase the savings balances of more than 3,000 women for an amount that actually reaches more than 35%. So it was one of the biggest success of the program. So the second finding is that women maintain stable financial relationships, but face limits in accessing certain products. So across institutions we analyze, we observe a remarkable consistent pattern, which is women tend to be more loyal. They maintain longer relationships. They save consistently, and they demonstrate stronger repayment performance. This is not new for any of you in the audience. And yet, despite these trends, they lack access to larger value products. And for instance, in one cooperative, women represent approximately 55% of all the members and remain with institutions for an average of 7.4 years compared to 6.7 years for men. However, the average commercial loan amounts were significantly lower for women than for men. Here, I think what is important is that data do not only allow us to conclude that these institutions are intentionally underserving women, but they do suggest that there might be frictions in risk models, escalation criteria, cross-selling practices, or just institutional processes that deserve closer attention. Moving on to the third finding is that financial health gaps may not be visible when we only look at the access and uses indicators. For instance, in these cooperatives, we saw that the account ownership was similar between men and women. However, when we ask questions related to financial health, or financial resilience in a particular case, we saw that the levels are quite different. So for instance, in one cooperative, 35% of women report raising 12,000 pesos within 1 week, compared to they couldn't raise that money compared to 32% of men. And again, here, these differences could have remained invisible if we have just looked exclusively on product ownership or even on account of activity. Oh, I'm sorry. Okay. The fourth finding is that women and men product acquisition trajectories diverge over time. So one of the most innovative tools we use in the program was product journey analysis. So we map out the sequence through which members adopt products and examine how these trajectories were different between men and women. So the results show that women and men often begin with similar products, typically savings account, but as the relationship evolves, their pathways start to diverge. So men tend to migrate more frequently toward individual, commercial, and consumer credit products, and women, by contrast, remain concentrated in group-based credit products or other sort of lower value products, meaning lower value by the lower amount of those products for longer periods. The fifth finding is that women contribution is better understood through a lifetime value lens than through just isolated transactions. Many institutions actually evaluate profitability at the level of individual products or the individual client. So if we do that, women might sometimes appear less profitable because they often hold smaller loans, right? We know that. However, when we examine the entire customer relationship, the picture becomes more and more nuanced. So across the co-ops analyzed, women demonstrate longer tenure, lower delinquency, strong retention patterns, and yet profitability outcomes vary significantly depending on whether institutions enable women to access higher value products over time. Here, this finding emerged through this portfolio profitability analysis that incorporate revenue, cost, and provisions and product uses. And the sixth and final finding focuses on institutions themselves. We found that institutions are still operating at stage of neutrality or awareness rather than gender sensitivity or transformation. Through institutional diagnosis, we assess organizational culture, leadership, and knowledge of customer needs, product adequacy, and governance structures. And the results show that many institutions have made important advances. In some cases, women represent the majority of members or, well, the clients, and held significant leadership positions. And yet, formal gender policies, indicators, accountability mechanisms, and governance structures were often absent. So the challenge here is that when gender integration depends primarily on individual champions, progress became more fragile and more difficult to sustain. So I'll stop here and thank you.
Thank you, Marco. What you just shared was very powerful, and it brings us, I guess, to a critical question. If measuring financial health is so powerful to really understand the value from using financial services for clients, why aren't financial authorities doing more of it? Or what it would take for them to start, right? And that is precisely what CGAP has been working on. So I'll take a few minutes to summarize and present this work. Because financial supervisory authorities are indeed a central piece in this puzzle. They have the mandate to collect most relevant data to measure financial health at the system level. And they also have the reach to mainstream financial health considerations and analysis and measurement across the whole financial sector. So to make it systemic, not just a one-off exercise by individual providers or funders or research institutes. So financial sector authorities exist to ensure that financial institutions are sound and that markets treat customers fairly, right? In a nutshell. They don't have a financial mandate as such. But here's the beauty, that they don't need it because their current mandates and goals can already be connected to people's financial lives. When households are over-indebted, when products are missold, Peter laid that out very well. When financial stress accumulates silently across large segments of the population, these are not only consumer welfare concerns, these are early signals of risk for financial service providers and ultimately for the system stability, right? At the same time, the tools FSAs already have at their disposal, prudential regulation and tools, market conduct rules, supervisory action, expectations, etc., they are amongst the most powerful levers available to promote financial health at scale, right? For the reasons just mentioned. Sound, well-governed, responsible financial service providers contribute to better customer outcomes, almost by definition. Fragile or reckless ones undermine them, right? So measuring and monitoring financial health is not a detour from FSA's core mandates. It is a way of exercising those mandates with a fuller picture of what is actually happening to the people the financial system is meant to serve. But how can they embed financial health into their analytical and political frameworks? Now, here the field is still emerging. There's very little guidance out there or a sure framework for how authorities should approach this. And to fill this gap, CGAP has developed is finalizing a financial health measurement framework designed specifically for financial sector authorities. So what it does, it translates the G20 GPFI definition of financial health into something an FSA, a financial sector authority, can actually work with. In our framework, this means 6 measurement constructs and 17 indicators that are grounded in a review of 70 plus financial health measurement initiatives from around the world. So we haven't, nothing was invented from scratch except for the conceptual framework. But the framework draws on what has already been tested in practice. And most indicators can be calculated with either survey data or administrative regulatory data. The 6 constructs follow the logic of the G20 definition directly. So can people manage their daily financial needs and obligations without strain? This is the first component of the definition, right? Paying bills, servicing their debt, sustainably avoiding loss from fraud or misconduct. Can they cope when a shock hits? This is the second component of the financial health GPFI G20 definition. Do they have savings? Do they have insurance? Do they have access to emergency funds? Third component is about harnessing opportunities, prosperity. Can individuals and households pursue their longer-term goals? These we can measure by answering questions such as, are they accumulating assets? Are they saving for their retirement? Are they investing in their futures? Peter covered all these elements very well in his introduction, and so did Marco in the analysis that FSPs did. At the end of the day, all stakeholders, financial health is as Peter said, a universal concept. Whether you look at it from different perspectives, at the end of the day, it's about answering these types of questions, right? And to end with the definition and the indicators that we have in our framework, do agents feel confident, in control, and not burdened by financial distress? So together, these indicators and constructs give a picture that no single indicator and no mandate by mandate data stream could produce on its own. I want to be clear about what this framework is and what it is not. This framework is not an argument that FSAs should be responsible for household financial outcomes, because it's affected by many other variables and drivers: income levels, employment, housing costs. These are largely beyond the reach of financial supervision. But what the framework offers is a richer, more customer-centric lens for assessing outcomes that supervisory work already touches on in part, as I explained in the beginning of my remarks. So used diagnostically, this framework helps mapping how vulnerability is distributed across population segments, by gender, but also by age, by income, by geography, and which dimensions compound. Used evaluatively, it tracks outcomes before and after policy interventions. And used as an early warning tool, it can surface emerging consumer stress before it appears in complaints, data, or in prudential ratios. So this is, again, not a new mandate for supervisors, but a richer outcome lens through which to exercise existing ones. Now, what does gender fit in all of these? I think it's clear to this audience, but let me just make it clear. So disaggregating financial health data by gender is not simply a matter of adding a variable. It really requires granular, highly quality, administrative or survey disaggregated data that was designed at its origin with segmentation in mind. And this might be one of the biggest challenges for authorities to measure financial health with a gender lens, right? It requires also, so the data availability is one big challenge. It requires also analytical rigor to avoid the biases that creep in when data systems were not built to serve women as a distinct segment. And it often reveals things that aggregate data obscures entirely, as Marco's findings from Mexico illustrated. So in part to help solve this problem about data availability, disaggregated data availability, and unbiased analysis, CGAP is developing a practical package to help FSAs mainstream customer segmented financial analysis by gender, but also by other socio-demographic dimensions, because we know women are not monolithical. They are people with an age, living in a certain area, etc. So we are putting together this guidance to help supervisors mainstream this customer segmented analysis into the regular work. And we have developed a tool, the CGAP Lens tool. It's a catalog of 200 plus indicators that helps in this disaggregated indicator kind of thinking work. It comes with a companion. It will come with a companion guidance. We are hoping to publish this by the end of the summer. This is for another discussion that's actually happening next door in a parallel workshop. But those of you who are interested in gender disaggregated data and analysis, and because this is a topic that, as I said, is very closely connected to financial health, our ability to see financial health and measure financial health relies on our ability to collect the right data and use it adequately, right? Please do reach out to me, and I will be happy, me and team, to share our work with you. Okay, last one final note before I turn to the audience. The framework, because I'm anticipating maybe a question from the audience. We do not advocate in the framework for or against the construction of a composite financial health index. We propose the 17 indicators and recommend that FSAs use them together as much as possible because no single indicator tells the full story. But we do not prescribe a methodology for aggregating them into a single score. How indicators are combined, weighted, or prioritized is a decision each jurisdiction should make for itself. Just as states will determine which indicators to use based on data available, etc. But FSAs do not need to measure all 17 indicators to begin. The right starting point depends on data environment and country context, and our forthcoming paper works through this systematically by proposing country archetypes. What matters more in the beginning is that they start that we start trying to grasp the concept and measuring the concept and discussing early findings. That we share what we learn in communities and learning platforms as this one today, because the evidence base for what works across contexts can only be built collectively. Okay, so I think that what emerges from these three different perspectives that we heard today is both opportunities and challenges. Right, I would now turn to our audience for any comments or questions. I'm not sure how much time we have left because I believe we started a little bit late. So I'm confident that we still have 5 to 10 minutes. So let me stop here and please do raise your hands if you would like to share your views, your experience with us. Any questions? I see one question in the chat. Marie Mintalucci asking, wondering about the availability of financial health data collection tools. Women Safe, they have a scorecard, but would like to align with industry standards and not reinvent the wheel as much as possible. So I can say from the institutional, the global perspective that there's substantial efforts ongoing to provide users with global data, both from global FinDex, that would be survey data, as well as from the OECD. There is a round of the INFE survey that includes very a big number of questions trying to measure, addressing financial health issues. But from the FSP perspective, I think I'd ask
what you can see, and so if you click on that, it'll go to a page that will give a little description of it, and then the link. The links are all externally hosted. We're not hosting them ourselves. And as I said, we're going to be updating this a lot. I mentioned that it's not only user filterable, but it's also user generation. So you can, at the top, submit a resource. If you're already one of the organizations that's published on there, you can add it. This will go to a dedicated email address. We will then curate, check for quality, annotate, tag as needs be, and add it. Or you can update the publisher, which is, the author oneself. I should mention that this was done with the support of the Luxembourg ministries at the bottom as well, and thanks to them. And then there's various tags at the top about how to use the portal. I won't go into more detail than that because this is not supposed to be just a plug for a platform, but as a kickoff. But there is the URL. Please do have a look at it. You'll find the email addresses and mine in there. Please give feedback and please do send resources as well. I'm going to stop sharing now. If I can work out how to do that. Excuse me. All right. Well, I'll turn it off in a second when I've worked it out. But let's. So now that we've done that, I'd like to go to initially for just responses on what I've just shown from Mariana and Thomas, and then we're going to talk about this first theme that I introduced, which was information scarcity to information overload. But Mariana, perhaps would you like to open with something?
Oh, yes, about the yes. And first, I would like to say that it's great to see the portal in action. In fact, I'm so happy that it's now live and everyone can actually navigate it and everything. So yes, can you repeat me the question, because I was trying to figure out the recording from my team.
Well, no,
from
that's
my
okay.
team.
So let's really move on to what we'd sort of discussed between us as the first theme, this information scarcity to information overload. I mean, do you see that we've reached a point where the sector, the inclusive finance sector generally, and let's say the gender finance sector specifically, is producing more resources than practitioners can realistically absorb or use? Like, do you think it's got too much?
Yes, I think that's a great question, and the honest answer is that yes, and to some extent we have reached that point. And this is I can say that from my experience with FinEquity and the FinDev platform, where we curate a lot of resources that the sector produces. And in the past 5 years, we have seen an explosion of resources like report, framework, toolkit. Everyone looks like everyone is producing something, which is good because it shows that the sector wants to learn. But at the same time, some of the reports are very short or not very deep, right? I guess there has been influenced by the new social media trends that there needs to be under 40 seconds on that. So some of those, we have a lot of resources, but sometimes they are not exactly what the practitioners might need, right? First is that there are a lot of resources available in the sector. Then what I see also is that there is a lot of duplications of work or reports doing by organizations, right? And the quality also is not really good. And I think that having too much is okay. A lot of resources, as good as we know how we can use it, right? And who can use it, and that it have some practical tools that you can apply to your work in the sector.
Thomas, would you like to jump in there?
Yes, sure. Thank you, Sam and Mariana. And I agree completely with what Mariana was saying about we have too many things on the internet, different websites, reports, duplications. There is way more quantity than quality, at least that's what I've seen in the past years, let's say. And I think that here is key. I mean, and I agree with what you were saying, Mariana, that all this quantity of documents, reports, trends, data, it's important because actually it's a symptom that there is an ecosystem or a sector wanting or willing to know more. But the thing is to differentiate more with better. I think that's where we are today, because there is a lot of information around. Everyone can access that information, but when we are moving towards impact, moving towards putting into practice what we need to learn in the gender and finance on gender impact sectors, it's important to understand why it's important, but then moving towards the how. And I think that we still are facing some gaps in that regard, no? I mean, I would say that my hat here is I'm a practitioner because we provide TA services for diverse organizations willing to incorporate these lenses, and we sometimes face that overwhelming coming from those companies or people to whom we are speaking, caused by too much information and the complexity to move from all that information to something doable, something actionable. And as you were saying before, Sam, we are sacrificing at some point depth for breadth, no? And I think that here we have a very important. I mean, this, let's say, crisis of information also opens the gate for opportunity, and it reinforces the importance of continuing strengthening these knowledge hubs that we have, such as FinEquity, the gender platform that you were. The portal that the GI portal, sorry, Sam, that you were just presenting, or the ones that we have at La Mujer, that can consolidate, organize, and curate all that information. Because at the end of the day, we are at some point the experts, and we need to put all that information together in a way that can be easily communicated. in a way that, as saying, effectively guide audiences toward relevant gender-related tools, experience, and concepts, no? And as we're speaking to many people at the same time, representing diverse areas or interest, I think that these platforms can bring together these key insights, going from metrics and KPIs to case studies, reports, reporting lessons learned, both from success or failures, tutorial, practical guides. I mean, there's a lot to read and to learn from. I think that today we have the opportunity to put all these platforms together in service to these audiences that we aim to impact. So yes, I agree with that initial question, Sam. I think that we are reaching a critical point, but we still have opportunities to make it better from now onwards.
Yeah, and the enormous explosion in information. I mean, this is parallels the internet and sort of modernity at large, doesn't it? It's not commensurate with more quality. It's just more quantity, which makes it does mean there will be more quality, but it is buried in a higher volume of poor quality, so that being able to find what you need within it gets harder, even though what you may be able to find might be better. I mean, we see that everywhere, don't we? You mentioned case studies. That is one thing as well that we really have heard throughout this was the priority that should be given for practical examples. You know, when we've asked people, what do you want from this? It has always been, we want to see case study examples of things that have worked and things that have not worked, not just conceptual, abstract thinkings on the importance of women's empowerment or on questions that have been long since settled. Yeah.
And Sam, if I can complement
Please.
something to what we were saying is that we recently conducted like independent evaluation, not only for FinEquity, but also for the FinDev platforms. And the result shows that our audience value the most is our curation and how we highlight what you need to read or what toolkits do you need for your work that to keep up with the trends in the industry. So this is very important, right? That even when we have all these massive number of resources, there is a platform, as Thomas was mentioned, that can do that and spot that for you.
Yeah, and it's also, I mean, maybe jumping around a bit here, but it's true of that sort of that value add, the increasing importance of synthesizing information into quality digestible bits is also, you see it in the gap that widens between, this is a personal bugbear of mine, is the gap between the academy, between academic writing, peer-reviewed research, and the end user and the practitioner that needs to use it to. And as more research is done, it gets more and more diversified, more and more specialized, so that people are only writing on something incredibly narrow, which means it's less and less accessible for the kind of people who might be ultimately able to get value out of it. So finding a way to translate that language and those learnings into practical use and translation sounds like a facetious way to talk about it sometimes, but a lot of it times it is that we've all read papers that are almost unreadably, deliberately inaccessible. And I find that gender finance is in many ways particularly susceptible to this because of the explosion of terminology and in some cases jargon that is inaccessible to the kind of people who need it. And they feel like they have to learn a whole new language. And I'm just seeing the comments coming. And our collective attention spans are not what they used to be. Yes, quite. That too. Yes, I have a 5-year-old who has a absolute breakdown when the moment the TV goes off. I think we all so yeah, totally. I'd like to move a little bit to AI now or sort of human curation. I think we all agree that this sort of human curation, however done, is valuable, but we're also living in a world where the opportunities for AI efficiency are almost incomprehensibly exponential. So how do we fit these two together? Where does human value add still matter when we inevitably are going to use AI at different stages of this? Thomas, would you like to go first? How do you see the use of it?
Yes, thank you, Sam. I think it's a very interesting question. As we are like learning from living with AI nowadays, um, I think that the thing, I mean, the most important for me, at least when I think about these things, is that AI is a tool. I mean, at the end of the day, it's something that we can use on our favor to do things better, but we cannot expect AI to bring all the solutions to the table. As practitioners, when we develop action plans, diverse, I don't know, initiatives or ways of implementing gender mainstreaming or gender lens investing, of course, the use of AI helps us understand like maybe the context or some initial ideas. We can do some benchmark coming from AI, but at the end of the day, like I think creativity is where we do that difference. No, I mean, where we as humans think the like provide solutions to to some or to specific problems, but with the idea of doing something new. Because at least from my experience, like AI brings solutions as if we're like already designed, you know, and when working with clients, when going to territories, when speaking with funds, with financial institutions, with SMEs, women-led or men-led SMEs to understand why to do better in gender and the importance for the impact and for their business as well. Those nuances, those gray areas, those things that we collect from those dialogues are key and are not going to be provided by AI, at least not today. So I like to think AI as a tool where we like bring this input, but at the end of the day, the ones who need to use that input to make better or to design better solutions, it's still on our side, and I think it will still be on our side for a long time, because that's where we are going to make that difference, that added value, using the data that we can aggregate. I mean, maybe the difference between the aggregated data and disaggregated data, talking about also these gender like words. But AI brings this aggregated data, collecting info from whatever. Our job now is to disaggregate the data and see how we can put together those inputs for better impact, contextualizing, understanding how that's a match for the specific project that we are moving or that we are implementing. That's the way I see human thinking is still key when using AI.
Mariana, how are you using it at FinEquity?
Yes, I perhaps I can also rephrase a little what you know, to agree with Thomas on the fact that AI is just a tool, because I think that human value added has actually become more important, no less, now in this AI world that we're living right now. And this is comes also with the FinEquity work in this context, because I think that AI cannot help us decide what to trust, right? And humans can do that. The AI can give you like the information, but it doesn't always know if it's correct or useful. And humans will help you to choose what really matters. And we, as the curators in FinEquity and FinDev, we choose that, and we can also provide context, right? Something that the AI cannot give you. Question like, does this really work here, or this is something that is really useful? So AI cannot actually provide that. And also bringing back the trust word, which I think is really matter, is that that AI cannot replace the human connections. It's nothing more like, you know, staying in touch with one to another. Something that we also discussed at the GLE forum last week, Thomas and Carmen was mentioning in the plenary session, that this is irreversible, right? So I think that AI, you know, it's a great tool. AI can help us access more and process information very quickly, but the human touch is still needed.
I'm always struck too by how uneven the competences of AI are, and I found that within the development of the portal, and by the way, in the development of the Compass, which I'm working on at the moment as well. There are some things that it can be trusted to really add value to, and some things it can't. And discerning the two is really part of the human value add as well. So, for example, I find for summary, it's is an astonishing tool, right? So to have a first go at doing little précis summaries of read this paper and give me the key points in a few seconds, it's very good at. But tagging, for example, like what are the 3 keywords you would from this list you would tag to it will get right a lot of the time, but will make egregious errors, and you can't get to the bottom of why. In other words, it takes you as long to triple check that what it's doing is worthwhile. It takes as long as if you did it from first principles yourself. So I mean, it's part of it is just finding out where the value is, isn't it? And then because they can't really distinguish, AI can't distinguish quality. And you know what? Before this morning, I asked the AI what its answer to that question would be. And it said basically, you can't trust me to be able to tell the difference between high quality and not. What's ironic is that it got that answer from human training data. So we're in a sort of a paradox there, but I mean that's out of scope here. But I find that interesting. So I wanted to talk a little bit about the we've just talked about sort of human expertise and AI complementing each other. Let's move a little bit to sort of ecosystem coordination and complementarity. I know the answer is yes to this, but let's unpick it a little bit about, is there space for different types of platforms here that actually do add value and don't just contribute to the noise? We've talked about the problem of overcomplexity. Well, maybe by adding another platform, we're just worsening the problem rather than mitigating it. But how do, say, this portal, the Gender Platform, Gender Knowledge Lab, FinEquity, and by the way, other ones like the Social Investor Working Group, 2X, I mean, there's a long list, I won't go list it. How can they all sit together, would you say? Maybe Mariana first?
Yes, thank you, Sam. Yes, I think that there is absolutely a space for all of these platforms, and I think that maybe each platform serves different audience and use cases. And the only thing that we need is like a better coordination to what platform does what, and maybe have a way to connect each other, so users can find what they actually need in one, but if they don't find it there, connect to the other one and help to connect the dot between all the 3 systems. So I think we can complement each other and have a space for all of them.
Thomas?
I agree completely what Mariana was saying. Because I still see lots of space to this platform that like help us walk the talk. No, it's a way of putting all this information together that otherwise would be like too much to understand. It help us like go through the path, from general information, gender 101, let's say, or initial concepts towards, I mean, as we were saying before, like from the why to the how, like why it's important, and there is a lot of information, and what we do by organizing and curating the information is like to put like the highlights of that initial why together, so that someone who's starting with those ideas knows how to like move towards this like gender impact ecosystem, then moving towards the how. And in the how, we have case studies, we have KPIs, we have metrics, we have taxonomies. The importance here is like to help those who are thinking about impact investing and gender lens investing walk down the path. And I think that there is something very interesting and a huge potential for these platforms to work together, but also like to interact with their audiences, is at some point like to prevent the backlash. Because when we have like tons of information around, repeating the data, quoting between like different reports, we are facing a risk of people like losing their interest in this very important agenda. So here the platforms and working in an ecosystem, in working together for this ecosystem is still key to, as saying before, like helping people or our audiences walk with us through the talk from the beginning to the end, going through the different categories of understanding gender lens investing that we have. We need to be open. We need to listen to what our audiences are asking and use this platform as live organisms, let's say in a way, and being able to adapt to the new trends, as we were saying before, AI, but also interests and more. And that's, at least from my point of view, the best way, like to work together towards a more stronger, or towards a stronger gender lens and impact investing ecosystem.
Moreover, there's an element of future-proofing, as I see it, as you're building the infrastructure. Because if we extrapolate the curve, as I said, the 10-year explosion in information, and it's going to continue. I mean, maybe not quite at the same gradient, but it's still going to. There's going to be more. There needs to be better multilinguality, region-specific and global stuff. More new types of toolkits, integration of Gen AI into these platforms, which is not something we've done yet. But I mean, we're talking about AI as if it's entirely separate. But of course, what will inevitably happen is that we will integrate some of the search in there. My worry on that is that we get to a point where papers are effectively being generated by AI with little human insight, and then being read and analyzed by AI at this end, and then being summarized by AI for the end user. And, there are no humans left in there except for the women at the end who are, and we're easy to lose track of why we're doing this. I mean, you alluded to that earlier, and in the little the segue before this session, important to remember that this is about financial resilience and financial health of women. This is not about creating new resources or new platforms. These are merely sort of interim stages, aren't they? They're a means to an end. I think I'd love it if we had some questions from the audience. You can put up your hands, and because it's a small group, or please just unmute yourself and say something if you'd like. That would be great. It can either be about any of the three organizations, or it could be about the portal. It would be great to share your own use, positive, negative, fears, full-throated support of AI, or of suggesting where there are gaps maybe in information use and management that need to be addressed. Partly because now that we've built this, but the action group, I'm saying, now that the portal has been built and we get the process for content curation and updating in place, then we will need to start turning attention to what the action group does next, and welcome ideas on that. What should be the next challenge to address or problem to tackle? So, any questions? While we're waiting for that, what do you? I mean, maybe I could ask either of you two, like, besides where do you go to get the resources when you're trying to read deeper and learn more about a part of gender finance? Like, where do you go? I mean, do you stick within FinEquity's walls, Mariana?
I have to say,
You have to say yes.
Yeah. But of course, we get we have to go and find the resources, right, of where they are being produced, right? The things that then we curate all of that and add to our library. But I get as you were saying, we are at the risk of content being generated by AI, the entire reports, and then the AI summarizing that, and then we lose like the human center design that we actually need, right? So yes, but yeah, I have to defend FinEquity.
Yeah. And Thomas, that question, I suppose, but also, like, what's your process for finding or adding new resources to the Gender Knowledge Lab. I mean, I know it's been a struggle in the past, hasn't it, to sort of, because there are so many, and it's sort of it's hard to keep the process of updating, particularly when you're offering a TA facility as well. Like, but where do you find things to add to it?
I would I would also say yes. I mean, I use these portals, FinEquity and the ones that we were naming before. But there is something funny that I go where when I find myself like exposed to too many reports. I, for example, go for like to FinEquity's webinars because that's where I see like that those interactions that we were naming before, that at least for me are differential. Those connections where people are asking things because they didn't understand quite like the concept or the idea, and that's in those debates, that those discussions is where I learn and I see like all those little gaps or challenges that the ones who are asking or the one who are facilitating the workshops see potential challenges and provide solutions. So like my own process is, of course, reading updated information, contextualized information, of course. If I'm speaking like in Latin America, trying to look for case studies that come from the region or from other regions, but in the same sector. So I can find new information and learn from diversity, let's say. But like I will always try like to go through some webinars that make me think something different and that AI cannot summarize, at least not today.
100% agree. I mean, I was going to say a version of that as well. Like I cannot imagine ever there being a substitution, not only for online events like today's, but in-person events. I mean, you know that we host what used to be European Microfinance Week, now is called Inclusive Finance. You were there with me back in on the panel in November. Mariana, you were in the room as well, where we sort of gave an early presentation of this stuff. You cannot replicate that. You cannot have a conference full of agents and bots. It is about making sure that the resource management and presentation complements the stories that we heard in the earlier session from the Moroccan central bank, and then you cannot get that just from a written case study. On the just maybe just tiny sidebar there. A lot of the resources on the Glee portal are written resources, but not all. As we grow it and get better at it, we are going to add podcast episodes, blogs, links to videos. It should be multimedia. We think that while gender lens investing maybe needs to not be defined too broadly, but resources can be defined broadly, because resources don't just have to be a toolkit or a static PDF. There can be lots of interactive and engaging things. So, I mean, I think with that, I'll probably maybe we can sort of transition to the end here. Hi, Jenny. Would you like to say something?
Hi.
Before you do, I flagged it. As I gave Jenny a shout out earlier, but Jenny was
I heard you. I appreciate it.
who led on the hi Hannah, on the content creation part. So thank you, Jenny. Great. Please do say something, and Hannah then, and then Caroline. Thanks.
Thanks. Sorry, I couldn't see how to raise a hand.
Sorry, 1 second, Mariana.
Yes, we have 4 minutes left. They are telling
And that's a hard 4 minutes. That's a hard 4. Okay. Really quick then, Jenny.
I wanted just to pick up on the theme, that you and the other panelists were talking about in terms of, so I presented this last week at the Promo Hair GLI conference, and I was on a panel with other networks, and we were just discussing, sort of how do you keep that community of practice alive, and I think that there is a hunger for having a variety of spaces, places where you can share information, places where you can, have these kinds of webinars, but also, as we grow these networks, sometimes it's hard to kind of keep that, the physical space of, the physical interaction of a conference like the ones that European Microfinance hosts and Promo Hair and everything. And I don't know that we've cracked that entirely right about how to keep that conversation going. But would love to hear if anyone else has ideas. And I'll pass it to Hannah for another question. So.
Hi, Hannah. Thanks. Go ahead.
Hey, sure. It was a quick one actually. I was wondering, is there like a feedback function within the platform where users can sort of like upvote useful metrics or some kind of like way to see what's most used? I just think that would be an interesting filter as well for me as a user to be able to see like, okay, this one was the most popular among my peers or something like that.
We talked about it. It's not impossible in the future. The trouble is that with that come other things, like it would really require sort of back-end access login rather than otherwise it would just be attacked by bots. There are ways to do that, but there are trade-offs, and we decided that at least for version 1 it should be frictionless as possible, no login, anyone can use it. But yeah, that's if you we can talk offline about that if you have specific ideas, but yeah, we did discuss
Cool, just wondering.
Maybe
that makes sense. Thank you.
Thanks. Caroline, quickly, please. Thanks.
Yeah, thanks, Sam. I just wanted to say I would love to talk more offline if possible about the portal too. At Grid Impact, we recently released something kind of similar, which is a hub of resources on barriers and exemplary solutions to women's financial inclusion. It is meant to be this evidence review and meta-analysis from places like FinEquity, CCAP, World Bank, so that we do that for folks and turn it into digestible resources. So as you grow this and as we think about how our hub turns into a living portal, it'd be fantastic to see how we complement and not duplicate.
No, let's do that. Yeah, get in touch and and speak to Alex as well. Say hi to Alex, would you? And I'll speak to her too. All right, thank you. I think then probably we'll wrap up here to say this is a work in speaking. Firstly, thank you to Thomas and Mariana for doing this and for all of your contributions in the last year on this. In terms of the portal, as I mentioned, it is going to be this is version 1. It is going to be a living thing. Please do have a play with it. Please do reply to the email address in there to give feedback. We'd welcome it. And also for contributions on the action group generally on what we could do next. If there are partnerships, collaborations, funding, knowledge, products, we'd welcome that too. As I mentioned before, we do see the goal here is not more content, but about more usable knowledge and stronger connections along the ecosystem. Mariana, last word from you, if you'd like, in 22 seconds.
Oh, okay. Let's work together and collaborate between the 3 platforms so we can make this very useful for the sector.
All right. Thanks very much to you both. And then do we just stay here and this will disappear?
It's going. I think we have like 10 seconds and then like a countdown for another. Let's say 30 seconds, and then we are going.
Up. Do you want to close all breakout rooms now?
I think, as you think, 45 seconds that we have here.
Okay, so we can leave breakout. Thank you for those who, thank you very much for coming, and please do get in touch with any comments and thoughts. We welcome it at the EMFP. Thank you. Bye.
Thank you very much, everyone.
Thank you. Thank you, everyone. I think, Danny, if you can confirm that we are all here at the plenary already, or if we have like a couple of seconds in this workshop.
Yes, we're in the process of having everyone back, not leaving anyone behind.
Okay, perfect. But I think we have like 30 seconds, right? Until they all join us.
Yes, but it should be closed by now. Everyone should be here.
Okay, perfect. So I hope that everyone has a very productive sections as we did in workshop number 5. And now what we are going to do is that we are going to call one leader from each of the workshops so they can come and debrief and share some main takeaways. So let's go to workshop number 1, which is Carolina. Can you please?
Thank you, Mariana. We had a very nice discussion and very informative based on the experience of our speakers coming from very different types of institutions, a commercial bank, Women's World Banking and CARE with a project working in really providing support to financial institutions to develop new products and not only to design it, but to take it into the market. So I think that our main features here to share with the plenary is we need to have effective products that will be used and really will support the financial lives of women. We need to do it thoroughly. We need to really understand the reality, test it, but we need to have the products designed, tested within the commercial journey of the institutions to change, to allow them to adapt to these new types of products. That means we need to do it very thoroughly throughout the process, but we need to have a clear intention to make a change in the type of design and how we use the insights from the women's lives, but also with the intention to adopt some changes within the financial institutions to make these products to really flow and have a decent life. Veronica from Banco Sol told us that intentionality is not only making the statement that we want to serve women better, but also having changes within the institutions that are relevant, changing KPIs, ways of measurement, data usage, but also having more women in the management team, not to penalize men, but to include women in those conversations and in all decision-making boards. Confidence is a key issue, and we need to address that most of financial institutions are not very good in building these confidence relationships with women's clients. And for that, there are a lot of experiences around the world that show the role of personal communication, but also the training in digital capabilities to build these trust relations. So I will leave it there. Thank you.
Thank you, Carolina. Juan Carlos?
Thank you, and to my team, to my workshop participants. Sorry, we were caught up. Couldn't even do the wrap up since there was so much engagement. Saying apologies to Luis, who was caught in the last few seconds of his intervention. But in any case, it was very, very interesting engagement with insights from Fundación Microfinanzas BBVA, Gabriela, from Zulita at Alliance for Innovative Regulation, and from Luis Treviño from Alliance for Financial Inclusion, AFI. And what I can briefly summarize first is overall the great importance of data collection. Everyone very much understanding the importance of going beyond demand-side survey, but also really going into the analysis of data, of transactional data, the supply-side data, as we can call it. Then we went through interesting initiatives. Gabriela shared, for example, that they had not only knew about overall biases, and unfairness with data, including that on average women got 14% lower amounts than men, but also they were able to do some gender bias study within a financial institution in Dominican Republic. And by doing this, they actually managed to identify that, the conditions for women and men were not unfair to women. But the good point is that the study was done and information was gathered. So we felt this was very good example of actually gathering the data and analyzing based on actual transactions, loan transactions, etc. What also interesting, the tools that AFI has been doing in terms of collecting data, promoting a set of indicators going beyond uptake and access, is going more into quality and other types of indicators, and that's a very important point and message for financial sector authorities. Also talking about, in terms of challenges and opportunities, the usage of AI and technology to help authorities to go from manual to email to more AI-powered type of analysis, and that's an opportunity to go above and beyond what's now available to kind of leapfrog the current challenges. And then Sulita also talking about how important it is to go and be much more innovative in terms of collecting, analyzing, and collaborating in terms of data, right? And thinking about tech sprints, thinking about translating data into action. Some examples that she's sharing in Nigeria and Tanzania to think about how to use sprints and collaboration with financial and tech providers to have a much better design of new types of ways to analyzing, gathering, and even collaborating and putting data out there. So I think there were some very interesting examples of all these dimensions and some also links that were shared with everyone that you can check and take a look at. But yeah, overall, very interesting, different perspectives on the importance and the opportunities for better data collection and usage.
Thank you, Juan Carlos. I love the energy too. Let's go to Tatiana then.
Thank you very much, Mariana. And I do also apologize because we were caught in the middle of final remarks. Okay, so our workshop was about women and financial health. And Peter McConaughey and Marco Del Rio joined me for this workshop. Peter spoke about how financial health is really increasingly being recognized, as a universal policy issue, not just a challenge for low-income populations, although for us, the focus is on this segment of the population. But it being universal, it's also a good thing because it attracts the attention of global bodies all over the world. So in very different contexts, the pressures are striking, and he shared some very interesting data, such as, in the UK, 20-something% of people have less than £100 in savings or investments. In South Africa, more than half of adults spend 40% of their take-home pay on debt servicing. In Rwanda, Tanzania, and Kenya, 70% of digital finance users report being affected by fraud or scams, and this is evidence emerging from CGAP work. So this points to clear shift in the field from expanding financial access alone to focusing on whether financial services actually improve people's financial lives, and in particular women's financial life. And that shift also reflects how the ecosystem is evolving. And while digital payment infrastructure remains a foundation, the next layer is really about building savings, insurance, credit, and investment products that support resilience and long-term well-being, and making sure that women, once again, are not left behind. So new forms of innovation are making this more possible: administrative and transactional data, AI-driven customization, open finance. Interestingly, Peter mentioned behavioral science to nudge customers to take the better decisions for them, and helping institutions design products that are more responsive to women's real needs. A major theme in the conversation was that gender differences in financial health outcomes remain significant. Women are less likely to save formally, less able to raise emergency funds quickly, and often report lower confidence in financial decision making. And these gaps are not simply behavioral, they reflect different lived realities, including caregiving burdens and even income patterns, differences, of course, in asset ownership and mobility constraint. And Marco shared the experience from Mexico, which offers a strong example, right, of what deeper analysis can reveal. So drawing on surveys, administrative data, customer journeys, and profitability analysis, research found that product design and messaging really matter. Framing savings as a freedom fund or peace of mind increased women's savings balances by 35% among more than 3,000 women. It also found that women make up over 50% of members and remain customers longer than men, with lower delinquency and stronger retention, yet they still face limited access to higher value products such as larger commercial loans. This study also showed that Y-axis metrics alone are insufficient, right? For example, 35% of women compare with 22% of men who could not raise 2,000 to 12,000 pesos within 1 week. And then he also spoke about the importance of product pathways, etc., which diverge over time between men and women. We finally discussed CGAP's upcoming financial health measurement framework, which provides a practical structure for policymakers and financial supervisors to really measure financial and foster financial health, translating the G20 GPFI definition into 17 indicators. So it centered around the globally agreed definition of financial health, which is about people being able to manage their financial needs without strain, coping with shocks, and pursuing their long-term goals. And the broader takeaway is that to advance financial health and to do so equitably, policymakers need better, more disaggregated data. Back to Juan Carlos's point, and stronger gender intentional measurement from the start. Let me stop here in the interest of time. Over to the plenary.
Thank you, Tatiana. And tomorrow we will be exploring more about financial health here in Mexico City. So let's go over to Jasmine.
Thank you, everyone. So our breakout session was on gender norms, and the discussion that we had centered had quite a number of different components. And we began with the fact that when we encounter particular behaviors, we have to ask ourselves, why are people behaving this way? And it's not just a singular why, right? Because there are many layers of beliefs and understandings and other behaviors that are underpinning those behaviors that we see in the market. And people are not operating in such a conscious way that they're thinking about the norm front of mind, right? And that they want to uphold it, but rather people are operating in default mode, right? And it's not a conscious decision, perhaps oftentimes, to uphold a particular gender norm. And so we really need to uncover what's behind many of the behaviors that we see. And once we have an understanding of the gender norms, we have to assess, how prevalent are they, meaning how widespread are these norms, and also how strong are these norms, and how strong is people's convictions of them. And that will in turn determine the type of intervention necessary to spur either norm change or behavior change. And it's not just women who need to change their behaviors and their beliefs in order to overcome the obstacles that gender norms present to their financial participation. We did a little poll where we had a scenario, a woman going to a mobile money agent to transact, and we sort of said, well, who are the stakeholders in this scenario who are driving what's going on? And I think maybe, a number of years ago, people would have said, well, there's the woman and the agent, and that's where the narrative ends. But really it's the woman, it's the agent, it's the financial service provider who has employed that agent, it's the regulator, it's the families, it's the community, and all of these stakeholders, were identified as playing a role in driving what's happening in that scenarios. And we had Audrey Hove from AFI in our group who was able to speak to, the incentives that the toolkit that regulators have, and also the incentives that regulators have to play a role in engaging on gender norms. And she called out, financial stability as an incentive for regulators to engage on gender norms, because the extent to which women participate in the financial system has a bearing on financial stability. I see a thumbs up going there. Absolutely. And we really ended with the discussion around addressing gender norms requiring both patience, it takes time, and it requires multiple stakeholders to engage. It cannot be done by any one stakeholder alone. And the first step is to really align on the value of women's empowerment and what it is that we want to achieve. And Catherine Sofu, if she's still online somewhere in this session, she was, speaking at length about some trainings she was engaged with that were very interesting. So I'd encourage people to connect with her during and after these FinEquity sessions. And Catherine, if you're out there and hearing this, I hope that you will share more of your work with the FinEquity community.
Thank you, Jasmine. Let's go then to Sam.
Thank you, Mariana. Thank you, everyone. Our workshop was called Curating the Ecosystem, Navigating Gender Finance Resources in an Age of Information Overload. So a little bit different than all the others. And I was joined by Mariana herself and also Thomas Gonzalez Burgess from the ProMujer Gender Knowledge Lab. I was presenting first just a recently launched GLE resource portal that EMFP have developed. And I gave a little walkthrough of that. Both Mariana and Thomas were involved in the development of that in the little advisory committee. But that was a kickoff to discuss the issues of really of fragmentation and complexity of knowledge resources in gender finance, the information overload issue, and the role of AI increasingly as threat and opportunity. And so there's, I think, a few points that I'd say that we covered there. The first is that the challenge is not access to information, but navigation and application. I suspect everyone here feels this, right? No one reasonably would think that there's a lack of knowledge resources in gender finance, or for that matter, in inclusive finance more broadly anymore. The challenge is helping practitioners find the right resources at the right time, understand how to apply them in a specific context. So the issue is shifted from the content creation side to knowledge usability. But with the explosion of quantity comes sometimes the sacrifice of breadth for depth. You could see this there are so many analogs for this. You could see it in the TV that we watch as well. The more means that it's harder to filter through for quality. And the same is true here. And this is really point 2, is that curation, human curation, becomes more valuable over time than ever. Curation means a lot of different things to different people. In the context of the portal that we've just developed, it means reading, tagging, annotating with a little trusted description of what this paper is, who it was written by, do they come with, are they creditable, and who will get value out of it and when. AI will always and increasingly help with a lot of stages, but perhaps that part is going to be where the human value add remains in not just collecting, but in organizing and contextualizing information, I suppose. So on AI, we discussed that it can improve discovery, but human judgment remains essential. And I'm sure everyone here has had this experience, being stunned by the opportunities for search, synthesis, personalization, summary, but human expertise remains critical for assessing quality, interpreting nuance, understanding local realities. And so the future will always be a combination of human and AI support, because what humans bring is creativity. It takes human value to do something new and add value, and there'll always be that important element of trust. The next point would be that different platforms. So by creating a new platform, I mean, we risk the accusation that we're falling foul of the very thing we're criticizing, which is this, more platforms, more information. But different platforms, Mariana, Thomas, and I argue, have different functions. They are complementary. And no single platform can perhaps meet every single need. It's beyond scope here to talk about what they each do and are different, but coordination between them is critical, and that will strengthen the ecosystem rather than just silo people into different, investors, you go over there, and practitioners, you go over there, and academics, you go over there. So we can work together. I suppose final point is the sector. We should focus less on producing resources. They're going to be produced anyway. And also the importance of practical resources, not just conceptual ones. We heard that in the development of the portal itself when we were consulting users, stakeholders. We want case studies. We want to see practical examples of things that have worked and have not worked. That's important. So we measure success not just by the number of materials you produce, but whether they actually are able to improve products and end results, and to remember that the objective here is not the development of resources or even the management of resources. The objective is, as was said in the preceding segue session, the objective here is about the financial resilience and financial health of women and girls. That is the end. Everything else is an intermediary step, and we must, I think, important to keep that in mind, that that's the actual measure of ultimate output here is are these resources actually helping policy and investment to that end. And I think the final point that we mentioned just in the very last bit was that there's the enduring value of conversation. So events like this, online events or in-person events tomorrow, or our own inclusive finance conference, can probably never be and should never be subsumed, replicated, made obsolete by AI, because there will always be the role of ideas, of storytelling, of anecdotes, of forecasting and arguing. These are really important. So anyway, that's all. Thank you.
Thank you, Sam, and encourage colleagues to go and explore the portal. Christina, over to you.
Hi, everyone. Thank you, Mariana. So I was moderating the panel of AI, digital finance, and women's financial inclusion, opportunities and risks. It was a very interesting panel because we had very different perspectives. We had Scott from Finca, who's the Vice President of Research and Data Science, talk about from a truly on the ground provider that has all the pains and all the opportunities for women's financial inclusion. And it was interesting that we all see a big hype, of course, in AI, but how to create products, how to put AI in front of customers. And he talked about a lot about the groundwork that you need to do internally and with change management and capacity building to really be able to responsibly expose these AI tools to women and to their clients. So a lot of yes, capacity building, teaching internally how to use these tools, really testing them, really making sure they work before you can scale them out. And one key message in general from the panel is that yes, there's a huge opportunity of AI, but the risks are very real, especially for women who tend to be more vulnerable given many circumstances. I'm sure Jasmine panel has a lot about this. And a bad decision or a bad advice that AI can give you can have devastating consequences. So really being responsible for these models is key despite all their potential. And Scott talked to us a lot about what they're doing internally to make this happen and to build these models responsibly before putting them to the clients. And then Nandini, who's the director of digital programs in Consumer International, painted more of a sobering picture. The discussion was really good. I'm just talking about the negatives, but there was also good things. But Nandini was more sobering, a little bit more doomsday, but acknowledged that AI has a lot of good to do to the world of financial inclusion for women. But she concentrated a lot on the risks, mostly raising fraud and preying upon women's vulnerabilities. And again, since women are already starting to in a disadvantaged place, this can make it or break it if they're not managed correctly. But she emphasized a lot we can fight fire with fire, and how other people and other AI tools are being created to fight against fraud, for example. And she mentioned a provider that now proactively sends you text messages if you're getting a fraud text message or a call or an email, trying to educate more people on what fraudsters are doing and if they're being targeted. So it was a very interesting conversation and she suggested that a financial service provider should invest $1 in developing AI and another one in consumer protection, because to set up for success, right? If you have many fraud issues, we're all just going to be in a worse place in the long term. So it was very interesting, her advocacy towards this consumer protection in AI. And lastly, I was also joined by Paul, who's the co-founder and CEO of Shortlist Futures, and he works in the market in Kenya and Africa, but has a broader view of the market. And he's very focused on how to use Gen AI to empower women's financial inclusion, empowerment, and resilience. And we talked a lot about how can you distinguish from like an AI product that they say it works for women for like something that's like intentionally works for women and designed for women. And he gave like a very interesting way of seeing all the providers and like proposals he sees. It's like, is this a painkiller? Is it a vitamin? Like, what's really the impact is doing for women? And like with that sense of like spectrum, see what's trying to solve, right? Like it has to be solving something very specific with women's in mind. So like being very intentional, very conscious of both the solution and the potential impact that it can have. And like with that mindset, it's that they do different investments and grants to different providers in Africa. He talked also about many risks. You should definitely follow his newsletter, and maybe I can put it in the chat, because they're going like deeply into women's lives and Gen AI. And for example, just like to leave you one data point that really surprised me is probably large language models in Africa today do well around 12 languages, while Africa has more than 2,000 primary languages. And like women are also the ones that tend to talk more in these local languages. So it's like it's still a huge, huge way to go for these models to like really work for the last mile. And yeah, and with that, yeah, I'll pass it again to Mariana.
Thank you, Christina, and everyone for sharing these great insights from the workshops. And to remember this great moment of collaboration, we would like to take a group picture. So we are going to let everyone put the cameras on and smile, and then it's going to tell us when we are ready for that. So we can take, maybe Danny can say he needs to go over multiple screens. So let's get to do that, Danny, on your call.
Perfect. I think we're ready. We'll start with page number 1. I'm not sure.
Smile, everyone.
Yeah, who's going to be first, but better to keep your smile throughout the next 20 minutes.
No, 20 minutes, right? 20 seconds. And maybe while we are smiling, and I keep talking, I would like to say that this has been an amazing annual convening. We learn a lot from each other. And I have some quick reminders. The first one is that for those that are in Mexico City, we are looking forward to see you all tomorrow at Financiera Nacional. I'm sorry, I'm losing my voice. Maybe for the 4 hours that we have been here. So nos vemos mañana en Ciudad de México and in Nairobi at the end of the month for the FinEquity Annual Convening. And finally, if we are still taking the pictures, Danny, let me know. I would like to say that for those that would like to stay, we are going to have our last, our signature FinEquity Speed networking at the end for those that want to stay. So Danny is going to put us like in random breakout rooms so we can connect with each other or maybe share something that you have learned here. So if you want to stay, you can do that. We wanted to do that at the beginning, but because we were so many of us joined today, it was kind of difficult. So we let it for the end. So let me know, Danny, when we have all the pictures done.
We are good. Yeah? We're good. Thank you so much, everyone.
Oh, okay, perfect. So I would like to say thank you to everyone. So let's keep collaborating to serve women better, and see you on the speed networking if you would like to stay tomorrow in Mexico.
Thank you very much, Mariana,
Thank
for
you, everyone.
coordinating. Bye.
Thanks.
Yeah. Thank you.